Yeah. Um, Incredible. Wait a minute. Why do I have this on my chart? I don't even know. I have no idea. Good morning. Sorry. I'm sorry I was really loud right there. But I can't remember why I put this on the chart. But wow. So, um yeah, Wolf off a cliff here. It's filing for bankruptcy. So, if that's true, then it's going to be crazy. Crazy, crazy, crazy. AMC's down 1% this morning, but that's like 2 pennies. So 66% drop. I almost bought a put position on this thing because I thought it was going to come back down to 230. Jeez. Oh, man. It just dropped off a cliff. Yeah, I don't know what to make of something like this. I had said that I did not, and I feel really bad if someone was like buying in this because obviously you just got really screwed. I can't remember. I mean, aside from this being a dollar, I don't really know why I drew a bar down here, but that's where it is. So I'm not really sure why I would have done that. Yeah, I mean, aside from this being just a super dramatic spiral down move, I don't know what else to say about it. There's a grand irony to this that gets kind of political, but if you don't know the story of Wolf, it's an interesting one. How does a company go from making nothing but like higher highs for majority of its life run, you know, to going into like a distribution phase and then going all the way to a dollar? It's pretty wild. I mean, it's been here before. That doesn't make you feel better, but it has. In some ways, this is kind of like the natural step ladder down, but it's just like it had no reactions back up. And really is like an incredible move. So, yeah, there's not much else to say about it. Not right now. So the story here is that they had a complete change of business model. They decided to start manufacturing like microchips exclusively. And before that, I forget what else they were doing, but they were doing something pretty different. And so I'd have to double check again. It's been a minute. I read through their history. I can't remember right this second. It's just morning brain. So, but they were doing something completely different, and they decided they were going to do microchips. But they got a grant kind of deal, if you want to call it that, from the CHIPS Act to build this big factory out in I think it was like Charlotte, North Carolina or something like that. And so they were going to build this big factory and hire like 800 people. And what happened, of course, is that the new president was elected and decided he didn't like the CHIPS Act and he was going to repeal it. And the great irony being this is an American company who was trying to continue to build in America. And now they're going to be, I guess they're going bankrupt. So decided they filed for bankruptcy. So on an unsustainable path. If it's true, I mean, I don't know. You never know with this kind of stuff. A YOLO play here might not kill you if you're somebody that's like looking for something really quick. Because, and again, like everything we've done was kind of on the precipice that this was not going to go off the face of the earth all of a sudden. But I have to say, like, in some regards, even though this move is like terrible, it's such a massive drop. Like it's almost 100%. I mean, it's 70% now, and that was from the close yesterday, and it opened at like 40% gap. So to some degree, there may need to be a backup in order to just kind of close out positions. Like your bulls are not going to be happy getting screwed. So as soon as the bulls can kind of find some footing here, I think they're going to try to get back up to like 2. And I don't know if they're going to be successful at doing it, but they'll try. You know, it's a very high risk play in some ways, but you know, it could be a really good swing trade, like just off the cuff. It's at $1 right now. I think if it gets stuck beneath $1, you're in pretty big trouble. Usually, like if that ends up being a wall, then you're in trouble. Like it doesn't usually get broken very easily. So yeah, I mean, it's a rough one, and I feel for you if you were in it. I do. I had gotten out when it pumped up here, and I was pretty clear that I didn't think it was a good trade unless it came back above 5. And so I just did not invest. I was considering getting back in if it came to 250 and found support down here somewhere from 2 and 250. But at this point, it's like, who knows, you know? I think it probably got halted. Yeah, I bet it's gonna like come way up or something ridiculous after the halt, or vice versa. It looks like it got halted. It's not moving. I mean, frankly, if you're a bull, you were already screwed, so not really sure what the silver lining would be here. Probably missed it if there was going to be an entry. We don't know what's going to happen after this is done, but yeah, I think if it goes up, you're probably going to see 167, maybe $2. I'd be pretty surprised if it gap filled. I don't really feel like that's necessary, but it wouldn't surprise me to see this kind of come back up here and like chop for a minute and then come back down. So again, it's not necessarily like the opportunity that you may have wanted on this, but that's still like a huge move. I mean, if it does go from $1 here to $1.67, that's like 67%. So the bigger issue right now is that it's going to be probably halting a lot. Yeah, but I can't really imagine this just keeps dropping right now. I mean, I'd have to go back and look at some bankruptcy charts, I guess. But I just feel like it's got to make some kind of a rebound, because bulls are going to not want to just sort of sit it out. They're going to want to try to bring it back, get out of those positions. They don't want to sell on this. So and we'll talk about AMC in a couple minutes. Yeah, it's kind of a mixed bag report this morning. So we've had some good and some bad yesterday. I think there was a good chance that it was going to move, but there was a setup that was very familiar to what we saw in that Judge Zern decision. And I already kind of warned against that for AMC, so we'll see. Good you sold. I mean, you? Good you sold. Oh, yeah. Yeah. I was trying to tell, I think it was Reese or Heel Toe. I'm going to change their name, but this to me was like pretty guaranteed that it was going to do this and then hook and drop. So I really didn't have anything in my mind that said it was going to come back up here, and it kept doing this thing. I mean, I don't know why. Maybe the writing was on the wall or something, because this is pretty distributive. This looks a lot like what would normally happen before a spring, right? You go into like a spring mode. That's why I was saying, like, well, probably comes back down low, beneath $1, beneath $2 here, and I did not expect it to just capitulate after that, and just die. But I also didn't expect them to just suddenly have like a bankruptcy announcement. So I don't know. Is it legit? I think probably. Wall Street Journal out says it's an exclusive. Prepares to file for bankruptcy within weeks. Wall Street Journal, Wall Street Journal, Wall Street Journal. Some of these say they consider Chapter 11 bankruptcy. I don't know. Wall Street Journal got in trouble not too long ago for posting something. Oh, out of court. I see. Well, I'll tell you what. Yeah, I know. I've already been talking about it. I hope you weren't in it. I've been talking about it for like the last 15 minutes or so. It's on the screen right now. So here's what I'm thinking. I think it's going to come back up to like 160. I do. Whether or not it goes lower, that's another question. And I don't think this is necessarily going to be easy to trade. I don't think you're going to be able to catch a bottom. So it's definitely high risk because it could just keep melting down until it just suddenly stops. So why trade it? Well, volatility. Volatility is your friend usually, so I'm a big fan of it. It's pretty risky. Volume's really high right now. But yeah, I think I'll take that. And try. I'll throw $100 at it and see what happens. Because the thing is, again, like, if the report is true, first of all, if it's true, and you would think that it would be if they got a credible source or something, but even if it's true, it's like until the company like comes out and says it or doesn't say it, this could sort of continue indefinitely, I guess is what I'm trying to say. But weirdly enough, again, I had this on the chart anyways, and I think if you go back, it must have been this, because I can't remember why else I would have put this here, that this long-term had this possibility coming down to $1. But there was also long-term plenty of evidence that it might come back here. I mean, if you look at the levels that it's sitting at right now at $1, based on where it was in the past, this is actually a pretty sensible retracement. Long-term breakout level here into a long-term uptrend / distribution. and it does start distributing. I mean, when it got to where it eventually hit highs around $100 here, it's lost its trend, and it's starting to do those classic kind of cat ear motions, like it's struggling to advance beyond this wall. Again, I don't necessarily think that the writing was on the wall back there, that it necessarily was going to like dump off the face of the earth or something, which is what this looks like. This is an insane move. I mean, imagine if being in a short in this position back here, shorting it out a few years, I mean, you'd be a millionaire. But those are not very normal circumstances. So this is pretty unusual that they were shifting their business model and then they got screwed with the CHIPS Act, and who knows? You know, now they've got a bankruptcy article about them. I don't know. If they came out and they said, hey, this is not a true article, this was false information, then this would just rocket probably back to where it was. If it does come out and say, hey, this is true, well, I think it would probably be one of those things where, again, like the market probably sets it up to where it's already distributing. It's like getting ready to go back down. So I'm not going to say that it has to do this, but I think there's a good chance if it can find buyers here that it's going to come back up to like 160s, maybe $2. Because a lot of the people that got like screwed on these positions right here that were bullish would want to have some kind of a reaction. And this is a huge gap. It's like 40%. So it's pretty big. You know, we've had that kind of stuff happen here. And like it didn't come back immediately. It took a long time to get back there. But we'll see. I think there'll be a reaction. I'm not sure, but I think there will be. Anyways, we'll keep an eye on it today, and we'll see what happens. But I think 50 cents is probably reasonable here. Speaking of ones that I got out of Starbucks. So I had this sneaking suspicion that it was going to come back down towards like $83. I'm still not sure this is necessarily a breakdown, because it could be like this where it's like a dip before it pops again. So I'm still going to keep this on the chart. But I noticed that here it had like pushed up and then retreated, and that it had previous signs of weakness here and here. So I actually exited all my positions at 85. If you don't know what I'm talking about, that's okay. I bought 95 calls like right back here, and I actually played I played a short-term call here up to about 83 for an 85 strike, and so I had an 85 and a 90 strike. So I made good money on the short-term 85, and then the 95 I was waiting because I think it's going to happen, but I also think that timing here is a little tricky. There's a lot going on. I do think it's going to come back to the top eventually. I actually think this is a widening that broke out, so it could have a deeper retracement, but ultimately I think it's probably going to come back to $100. And so I'm looking at this as if it's like a kind of a localized spring, sort of like what happened back here, where you get this drop and then there's a time of accumulation and then it pumps back up. So it also has a nice creek cross. So I actually really liked Starbucks for the chart. To me, it's not perfect, and they've got some problems. You got people like on strike now because they don't want to wear khakis or something stupid. But and it is stupid. I'm sorry, but they're saying like, well, they're just out of touch. Like they don't understand what's really wrong with the business and all this stuff. It's like the baristas are what make Starbucks. I'm like, okay, that's fine. But to go on strike about wearing black shirt and khakis is, to me, kind of silly. I don't know. I just think it's like any job I've ever had and they have a dress code, it's always something ridiculous, right? You got to wear a uniform, I don't know what to say. So anywho, I have an idea here that this is not necessarily going to stay bullish forever, but it's probably going to come back up again. And so I still think it's tradable. And And I feel that right now, the main kind of move should be from this guy. There's like a double hit right there. And so at some point in the future, I think it's going to come back up. But when I looked at it locally, I had suspicions based on this that this may not actually go up. And if it does go up, it could be like one of these motions that sort of tries and fails. And when I counted it, it's like a 1, 2 right here, and then this is a low, 3, 4. Now 3, 4 jumped up, which is great. It did. But then you kind of look back and you're like, well, what didn't get checked on the way out? And there's quite a bit. And my bigger thought was right here, this 82, 83 level. So I went back and looked at the 82, 83, and I was like, well, to me, like that is being targeted. It's very likely being targeted. So even if this has like a pop up, and it might, this would still be on the back of my brain, like it's possible, because I think they're trying to get it there, basically. And it is another trend here, so it's fine if it goes back there. I think it's just a very likely place. And you might say, well, why not come all the way back and fill the gap at 80? I mean, you could, because in theory, if this broke down here, this could come back to 80 and still be on top of this creek. That's the interesting thing about this as a build out, is it's actually quite neat. But there's a 50-50 here that was curious to me. And anyways, so we'll see how it pans out. I'm not in it anymore. I'm just telling you, like, that was kind of why I got out, because there was just a sort of a sense of, okay, we've had these fairly consistent motions, and it's missing kind of that downward push. It's sort of in the right pocket for it. So I think I had it over here, like said, well, maybe it comes back down. Really, that could still happen, but I think if it goes up at this point and builds out, it could just leave, because, this could be considered an SOS, except that it didn't come over that, but it did come over this top. So it does look okay. So like if this came up, again, I'm not trying to flip-flop on purpose necessarily, but if this did come up and it didn't hit that low, but it just held here, I think it could just break out. It is pretty straightforward. But I also feel that there's enough evidence and like the way this set up with a 1, 2, 3, 4, that to me suggests this is either going to be like a buy-in zone that breaks out, which would be like this, where it's like rising up, and then it breaks out, or it's going to just drop and have like a reset here. And I don't really want to wait for the drop. So I got out of those positions with about 120% gain. I mean, it was an easy trade. So all of this was because I watched the earnings set up for Starbucks and then waited. And when I saw it drop as much as it did, I bought in, and that was it. So we will see. Yeah, I mean, in theory, I guess this could go pretty low, but I also think that it just broke out of the widening. So it should be in a position of strength, as long as it holds up like right around here, maybe 83. So I guess there's two different possibilities for buy-in. One would be at 88. The other would be down here at like 83 if you want to buy low. Yeah, well, Wolf's going the other way, so there you go. You're losing money, Buxy. Yeah, I know, but it's okay. I didn't put that much into it. We'll wait and see what happens. I'll probably consider like a stop if it drops more, like than 10 or 15% from here. Actually, AMD looking pretty good too. I'm gonna kind of circle around some of the groups that we have before going to AMC. If you guys are like, why not talk about AMC? I am looking at AMC. It's still right around where it was yesterday. It says it's down 1%, but it's really down like 2 pennies or 3 pennies or something. It's really not a lot. I'm just kind of running through the gauntlet here. So one of the things that I had mentioned about AMD processors was that this is still pretty bullish, because this could be like a wave 3 and then it's missing a 5. But the thing is that because wave 1 is way back here at like 97, there's not really a precedence that says you can't go back there. And when we did a retracement level for it, that is like the 618 level. So there's certainly a possibility, albeit it would be kind of a muted run, I guess, if it did go that low. There's certainly a possibility it comes down that low. What's really catching my eye about AMD is that there's a kind of a secondary widening right here. And this goes up to about 140. Now here's the great thing about this, is that technically based on where this triangulates, and I might even start going back into this because I was just waiting for this pullback, and I'm kind of excited now to get back into this potentially because I think the rest of this move might go down to 106, but I might be willing to average down because there's like two widenings. One starts here at 116, and that was already hit. So you can see right here, this is a widening out, and then it broke out. It's not a huge move because it didn't really start very high, but it begins right here around 119 or so. That was already met on that wave 3 there. The backup can go wherever a backup needs to go. A lot of times it's like a 236 or 382 move, but you know, there's a moving average on the 4 hour right there that's pretty low, 108. If it breaks down out of that kind of trend going up, then I do expect it to be maybe further over to the side. Obviously, right here it is just kind of just straight up. But if it broke low, let's say it came back to the 0.5, that'd actually be a pretty good retracement because this widening is, you know, could use a backup there. So it's not like the end of the world, even if it went down into June. My thought was that you'd have a breakout here around 121. And I still think that's a better entry, like on the whole, because depending on how it sets up, of course, because I think that the rest of this move is almost a given. There's a widening here that goes outward, and I'm not a huge fan of, actually we'll probably do that one. I don't know why I did that. I'm not a huge fan of trying to do the timing all the time, although I often do it. Because I know that things can change, and like that could be like a pivot low, for example. But if you look at where this widening began, which is right here from 133 up to, it's really where it kind of starts, and maybe you could argue it even started back here. You know, it's kind of a mixed bag. Doesn't really matter because the middle section there is still like 140. So I'm not going to say this is like a given, but if you get a breakout here at 124, it seems highly likely that this is going to run to 140. And that's a 17% move. It's a pretty big move. So highly, highly likely. That does not mean that it has to, of course, but you have a pretty strong probability in my opinion. So I would look at this as like a 1, 2, and then 3. And so 4 could be kind of choppy and boring. But then you can see like this outer creek here, it's kind of begging to be retested. And obviously this is a floor. So again, if it breaks above it, the next level up is kind of the next floor. And it is 140 zone. So I'm like highly, it's really right where that widening began. And very, very, very good chance this is going to hit 140 in the nearish future. I don't necessarily think it has to be right now. Again, if this is a wave 4, it could chop for a while. And right now it's sitting on top of, so I have these retracements here, but I don't really need all of them. I could sort of leave that and then do like this one because we're kind of already at the next one, which is like right here. Those are the main ones I look for anyways. And I think I already have that one marked off. Yeah. So let me get rid of that. But you can see like this particular level, it's trying to hold. It actually tapped just underneath it. It's a bit of a weakness there maybe. So I don't think this is necessarily a super strong buy right this second, but it's pretty close to like some of the early levels that I would have picked out. And if it's going to hold up, this could start forming out like a nice bottom here. And it can move as quickly or as slowly as it needs to. So the timing here is speculative. But there is a decent triangulation. 2 spots, I would say. One is a little farther over, that's like June 27th. It's right here. And then the earliest, if it stays within the channel, I would place it at June 4th. So if you wanted maybe a little bit of padding on that, frankly, you could probably even say by earnings, possibly. Now, if it takes longer than earnings and it's still like chopping for whatever reason here, maybe it doesn't go below that one. I mean, it could then, again, take a pretty long route down to the side and then chop here. Really no telling. This could be a very long extended wave. It's not impossible that happens, but I would be a little bit surprised if it were that long. Anyways, earnings is in August, so, you know, if you really want to be safe, I would say even after earnings, it would be at 140, which is still a huge move. So that might be a trade I'll start entering into pretty soon. And so far, this has been fairly straightforward, fairly on point. So what else? We went over Wolf, crazy lows because of it's not an announcement, it's an article on the Wall Street Journal about bankruptcy. Let's go ahead and go back to AMC, I guess. So let me just kind of tell you what I did here and why I think this is important. So one thing that I do sometimes is I basically clear my chart and I decide I'm going to reset, essentially, let's try again. And it's not about things necessarily being completely wrong. Like, sometimes you might think that I'm giving up on a previous idea. That's not really the case. I just, in my mind, like to keep kind of progressing and trying to do the next thing. And sometimes the next thing is like the first thing, which is like a really simple triangulation or a really simple S-curve or something like that. And then the comparisons that I draw, I do tend to go from different areas. One of the things that might seem very contradictory when I do this AMC stuff, I was thinking about it the other day, because I've said before that I don't really love I'm not a huge fan of the we are here kind of thing, especially when it comes to fractal analysis, because it's sometimes really inconsistent. But there is a sense in which if you can find the right markers, you tend to have a pretty good idea of play out, and depending on where that is in the sequence of things. And sequence is another word that gets really thrown around quite a bit because people think it's like a perfect sequence. I do not. I do and I don't. So let me rephrase that. So what I've said before, and there's a reason I'm going to say this. I'm going to show you a comparison in just a second, and it's going to look really contradictory to what I said before, but I'm going to tell you why I picked it, and then why we could say yeah, this is possible, even though it's frustrating. What I've said before is I think that this is largely the iterative motion right here. This is what we see all across AMC. And so I've contested that this is pretty much it. And what happens is that eventually this breaks out and it forms like an M cross. And then it should, at some point, if it's bullish, kind of return back to this middle. And then if it's really good and the setup works pretty well, usually you have this kind of breakout later that comes back up to meet the, here, I should have done it this way because you need to see that too, to meet the, what we call a wave. So this is the reason why I don't personally find a lot of the things that I do to be contradictory, although some people probably would. And this probably, in some ways, without sounding like a little arrogant or haughty about it, this, in a lot of ways, probably separates the way that I've done the stuff from some other folks who tend to look at the sequence very rigidly. So there's some sense of continuity in that. Like when I say like, well, we're in this region here, like that does not particularly bother a lot of people. And I think that if you looked at the bigger picture, you'd be like, sure, you just drew a picture of the whole. So that makes sense. Correct. But then one of the things that I would say is that this is the smaller iteration of this. Therefore, you can have more of the same, right, within this iteration, which means this iteration looks the same as the bigger picture, right? So then when you look at this iteration, you're like, sure, that makes sense. It does look really similar to what you just drew, as does the macro, right? Both of them, all of them kind of look similar in some ways. And the reason that that's important is because when you get to the micro, the micro of this, you would suggest that, well, that's kind of what you've been basing all this on, right? This idea that it pumps here is not based on blind, it's just super bullish, it's got to squeeze because it's going into May or it's going into June, because that's what the fractal does in May and June or something. It's not really about that to me. It's more about the fact that this should have some kind of like a new iteration of the bigger picture, because we'd be looking at things like micro. So you would see that inside of here as well. I didn't doodle it, so I'm not going to do that, right? I'm not going to doodle it necessarily. He's like, why not just do it, Booksy? All right, fine. But you would see this. Now, this is important because then when you look at the bigger picture, and I've mentioned this before as well, I often draw this other diagram that I call the cat ears, right? And I've said this before, that the cat ears are essentially just an iterative motion. I don't see these as mutually exclusive. I see them as part of this other diagram. Okay? That's me. That's the way I do it. So I look at it like this particular setup right here is what causes... This is what causes that overall kind of motion, that cat ear, for example, right here, to look kind of flat. Now, you could say like, well, you don't have to nest it. You could just say it's shrinking. Well, yeah, it is shrinking. And shrinking iterations almost always lead to some big move. They do. Usually if it's shrinking downward, it leads to an upward move. Usually if it's shrinking upward, it leads to a downward move, which goes more into the principle of like satisfying a range or exhaustion. And it's just a pattern that's easy to recognize if you know what to look for. All of this stuff, though, is kind of the same. And this is where I want to sort of hang my hat, because for just a second, because we're going to talk about the comparison that I did, and I'll show you a sneak peek right here. This comparison that I did and why looking at it where I'm looking at it could present a bit of a different setup than what was expected. And I don't want people to be like, well, great, he's changing it again. It's not so much like that. The thing is that during a downtrend, okay, during a downtrend, you will get multiple versions of the cat ears. You will. Because you're going to have them, for example, like right here. So there will be a series of cat ears right here. And like that, for example, would be one way to look at it. I'm going to try to use a different color, but I messed up. So it's important to note, like, the way that this kind of develops is always essentially like built out of this structure. And you see these kind of pieces of it within the structure. All right. As with this would do the same thing. And I'm not going to draw it because you get really, really small, but you get the point, right? Like this would do the same thing. So I'll just kind of do like this, like just to demonstrate, like that's also there, and it'd be on the smaller one. But then not only that, you'd probably also be able to easily see that this is also right here, right? Now this leads to all kinds of question marks, because you're like, well, wait a second. So you're saying that cat ear just kind of builds everything. So where is it supposed to be? Because you didn't ever talk about it being like in here. This is where the rubber meets the road. The cat ear itself, what it is and what it isn't. It is not some perfect describer of distribution all the time, because when it appears in certain places, it doesn't always have to be distributed, because it depends on the second part. We've talked about the second half right here, marking up or marking down. I've done that so many times. I'm just going to quickly say this is the big difference, right? Is that this marks up versus marking down. Okay? That's why I'm looking at something like Starbucks, like, well, it marked up on the second M. Even if it comes down, which it may, like, this could still be a really good buy opportunity as long as it holds support here. What I'm really describing is a wave formation, all right? And if you look at it as a wave formation, there's a lot of very distinct differences here that need to be accounted for. So like one would be that you could look at this as a wave that does this. Correct? Correct. We've done this before, where this is a wave that goes up, and if it breaks back above, right, is usually really bullish because you get this kind of buy back in, and then it jumps over. And this literally is exactly what happened in the 2021 marker, right? Almost exactly, right? The orange path here. However, one other way to look at this, of course, would be to just look at it as a wave top if it breaks down, because then you would have to kind of consider, well, this could just not go up. It could go down. So the idea of it as an S curve doesn't really like maybe do the best job. Like it could break here, but it has to sort of make a decision, you know. And then there's even a situation where this is like a long-standing creek and it still comes back down. Like it does an SOS, but this early part sets up bullish and it can go into a spring. And this happens too, like sometimes. So there's like every single path here has more than one outcome, and a lot of it will be determined based on what happened earlier on in the range, not actually what's just going on right here. It's not like you're just always waiting, holding your breath. You don't have to do that. So then when you think about it that way, it actually makes a lot of sense that there would be the same patterns involved here as there is on the big picture, because just like on the small scale, you have these breakdowns, you also have breakdowns like here, right? And more than likely, you're going to see a series of kind of smaller versions of the same thing right here into the middle of the waves. And that's sensible to me. It does not contradict, because usually this ends up being like right on the anchor point right there. This is sensible to me. This does not contradict what I've been saying all along, because this is like a smaller set of waves. This is like a 1, 2, 3, 4 that's breaking over a bigger set. Which again, it may sound really confusing, but it's all about scale and proportion. And like at the end of the day, there are places right here where you can break out, but it's very rare if it doesn't take that path that it reverses. This goes right back to the heart of what happened here. Like right back to it. So when we first came up here, you remember what I said was that there's a chance, maybe an opportunity even, to break out here. Now I don't remember exactly how I drew it at the time. It's probably something like that. But I said there's an opportunity to break out right here. But we didn't, did we? No. But if you recall, back in July of 2024, I had said like, well, this is an opportunity, but there's a problem zone right here. I said, if it does not break out here, it's not going to run. Now we had plenty of people, and I'm happy to have dissenting opinions. I am. And the thing is that this actually makes the most sense to me. Like if you're going to have people who have wildly different outlooks on the way the chart moves, this area right here is going to be the high contesting area. It's always where the cat ears are. Always, always, always. Always where they are. Like without fail. Every time there's somebody that says the stock looks really bullish, it's going to keep running. Or the stock looks really bearish, it's going to drop. that's always like some kind of a caddier junction, because it's always in that particular zone where you're getting the consolidation before the move. You're getting a decision basically about where we're going to go. And it may have already been decided. Again, in this case, you have this weakness early on, but certainly, like, would anybody have been overtly surprised if it had broken out here? Probably not, except for folks that were like, well, I think that's a sign of weakness. It's probably not going to go up. But even if it had gone up, they would probably say, well, I think it's going to come right back down, which is what I was saying, is like, it could go up, could even try to make a second top, but then it's probably going to come back down. I don't think it's going to keep running. Why? Because of this. So you look at what happened before, right? And that's what I'm saying. You look at what happens here to determine better what happens over here. But the same thing applies in this micro version of it here and here. Does that make sense? So like you have like a smaller potential wave right there. Could this break out? Sure. Has it broken out before? Yeah, on some stocks. We would just look at it as like a hyper compressed, faster version of the whole. And we would all be like, if you figured it out and you got it right, everyone would say, you're amazing, you got it right. So-and-so called it. The part of the reason why I didn't want to say for sure, and why I talk about stuff like sticky zones or like this is a problem zone or a danger zone, is that these areas tend to be less obvious. And like the outcome, if you're not 100% sure, and you got to be like as sure as you can be, right? But if you're not 100% sure about what happened back here or in the early part of the setup, you really can't be positive about what happens here. It's just not possible. Like it's impossible, in fact. You just can't. So, because there's just no way. You'd have to like, again, have future sight or something and be able to determine like exactly what's going to take place. So instead, if you're not sure about this, you have to kind of wait. That doesn't mean you can't trade the motion here. That's the great part about this that did work, is that, well, Booksy, you didn't say it was definitely going to run. You said there was a sticky zone here, but you did say that this was likely going to happen, and it did. And you called out those numbers really well. Yes, you can trade this. This is like pretty surely going to happen if the setup has the right setup for it, because this is a smaller wave with a retracement back up, blah, 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 blah. So like there is a nice trade here, but it only goes this far, and then you have to wait, okay? And then unfortunately, if it breaks down, you're possibly in a bigger iteration, right? Which is what happens. So in our case, we do this kind of motion, and then again, here's an opportunity right here to break back out. Where did that happen? Right there. It's like no different. It's the exact same opportunity that happened back here. It's just bigger scale. It really is. Like it's almost exactly the same in terms of wave formation, right? It's just that the scale on itself is like a lot larger. And there are other reasons why this would have been a really important place. So again, can you trade it? Yes. But again, Booksy, sticky areas. What's the problem with this? The problem with this was that there's really no precedence to necessarily break above here on this wave, except for just your own opinions about what you think might happen. So my opinion was that this likely could go all the way up to $8 at that time. But even still, I had posted chart after chart after chart that had, here's a problem area, here's another problem area. There were two markers here that were like, these could go pretty low and still satisfy the wave. So you can't really bank on the fact that it will break. It has to be like a, all right, let's wait and see kind of thing. Again, this one did back here, by the way. So like, when I look at this, I don't necessarily think of this as like a you are here kind of thing all the time. In the back of my head, I don't explicitly say it every single time because, and I have said it, it's not like I haven't said it. Because I remember when we came down, I said, well, one of my bigger fears is that this is going to do some kind of a caddier thing I probably would have drawn like that or something at the time, that this is going to do this, because if it doesn't go, which is what happened, then it may have this secondary motion. My problem in my analysis, which is a big problem, but my problem in my analysis was that I had suspected that the secondary motion would go significantly higher than it did, because I had suspected that this was the breakdown. When we got there, I was like, well, I think this is where it's going, and then it just failed, but it hasn't come back up. So I was thinking like, we're going to make this bigger wave that goes up to like near 8 or something still. It's very possible, and then we drop back down. So we have this big motion. I'm not going to sit here and like go back through all of the history of AMC and talk about every one of these instances. But I'm mentioning this because when we look at this next chart, there's going to be a sense in which like you're going to say like, well, Booksy, this is very different than everything else you've talked about, and it doesn't really make sense to me. Like, why would you have changed your mind about this or that? It's not about changing my mind so much as it is about exploring the reality of like what these waves are. A wave top will look like a cat ear. A wave bottom will look like a upside down cat ear, right? And then a hook is a hook. And you may have a lot of preconceptions about what a hook needs to do based on where you think those trends are. Those are great. It's great to use the waves, right? But we also have to just kind of take into consideration like the simplicity of things sometimes, because like it was in this zone, there's no real need to go beyond this point. And if the liquidity is there for downside, for example, they're not going to do some kind of extended push. They just don't need it. So one of the ways that I'm trading this right now is as extremely conservatively as I can. I said that I was a little bit concerned, and I said repeatedly, like the sticky area for me is this top. It is exactly like what we are experiencing here in some ways. Like, there's definitely a possibility that this goes up. I'm not 100% sure that it's going to go all the way to the top here, right, and hit $4. Even though there's plenty of evidence for that, I have to say that just like when we talked about 8, it's a difficult, like, 100%er, like to be like certain about it. I was certain enough that I bought a boatload of calls. I've since exited about half, and I'm going to continue to exit as we go up towards 350 if we can get there, because as it progresses, you just have to see like what's going on in the setup. Has it really finished? And one of the things that I'm seeing is that it's pushing away from this bottom. It's doing it in this extreme bowl shape, which is never a great trading pattern for AMC. I don't care how many people think that AMC has cup and handles everywhere. It is not a good trading pattern, okay? 99% of the time, when we have a bowl shape, it's not good. We need to see like really sharp bottoms like this with hard reactions that then hold support. That's it. Like the best moves on AMC have come from steep bottoms into a bounce that then holds support. They do not come from bowl-shaped bottoms. So this is one that's a steep bottom. It bounced and it held support, but then it's created this really gnarly looking low volume like bowl shape. And it just reeks of distribution. It just does. And not only that, but symmetrically speaking, if you look at this, it kind of looks like it's done, doesn't it? I mean, if you look at the overall structure here of this wave coming up, it's very clearly like panning out almost like a mirror, you know, and you can see it in the price action as well. And the question I would have is like, well, where does it stop? I mean, this macro picture does a good job where these trends are, I think, showing like that this is already at a middle. And I had, again, previously thought that there's a lot of big issues with assuming that it goes beyond 313 to 315. That's just a big problem area for me. There's so much stuff there that are like, it's like this kind of stuff when we talked about this. Like, yeah, I should have put more emphasis on 556 or 550s. I get that. But looking back, I did emphasize that it was a problem zone. And just like I emphasize this is a problem zone. It's not just because it's a top. It's because there's a reasonable kind of like stopping point there. There's a reasonable stopping point here. Frankly, there's a reasonable stopping point where we are now for a potential drop. So I need to be very clear that like I'm not trading this like I was even a week ago, because when this started breaking out, the fact that it hits and has this deep retracement, I'm okay with the back up to the creek. Don't get me wrong. I think that's good. I think that's overall healthy, but it didn't ultimately come all the way back down, did it? Like there's other creek markers here that got met and then some just did not. Right? This is one that I'm kind of like eyeballing. It comes up through here. This was commonly used as a resistance marker. This one didn't get met. Coming back down to 265 again. I don't know. There's another trend right there. And then I took it a step further and looked at this as a pattern of symmetry, and the symmetry doesn't have you going much further. It just doesn't. And I'm not a huge fan of like necessarily grabbing these things and like trying to figure out exactly where this is going to be symmetrical wise. But like if you take this bottom to this top, right, this is like a little bit of a bounce right here and a bounce right here. Just take a very simple kind of look at this and tell me what you see. Because to me, that looks very like symmetrical. And notice like when this bounced, look at where it goes. Like right back to the top. It's like already hit the first bounce. The second bounce here after a backup, again, very simple. But after it backs up right here, the second bounce goes up to 340. What's 340? It's the top from back here, the one that we dropped off of after earnings. It kind of looks like that would finish everything here. What about OBV? OBV is different. It's just not doing like what I thought it was going to do, but it's still hiking up. And I knew there was something wrong with this when we started seeing that on balance volume hike while we were low. We really weren't moving anywhere. We're not moving very far. Well, then what? Well, then the next motion is technically down. Now, we don't know that that goes and makes a new low. That's not a guarantee here. But if you just take the same measurement and you do it in the same timing, and I probably didn't do it on here, but if you do the same measurement and the same timing, this would drop down to 268 right there, which is right on top of that creek and right on that intersection. So again, like simplicity-wise, this seems pretty straightforward. Like there seems to be a very clear and evident pattern here that's kind of walking you over these levels, so on and so forth. Could stay bullish, yeah. Then it goes up. So then what's the up measurement? Well, this is where things get kind of dicey, because iterations after this point could happen again. And this is what requires a little bit of a venture into the past, because you might think that that has to be symmetrical, like so that it would just keep going. All right, well, that's cool. So it goes up to 340 and then comes back down. Is there other evidence? Yes, there's a really clear 1, 2, 3. There's actually one. There's a support. There's a resistance on both of these second knockdowns, second M's. This is a 1, 2. This is a 1, 2, and both of the 2s go up. That is a trend right there. It also intersects right here. What other evidence is there? There's a 50-50 S-curve to the top that says that this could stop there. Well, what about $4? I don't understand. You said we were going to go to 4. I had thought that 4 was going to be possible, but it would have been like a big gap up kind of move. Well, maybe it still happens. Maybe it still happens on Tuesday or something. Maybe. Memorial Day weekend's a possible bullish reason. Well, right now, the middle of this S-curve is, as best as I can tell, right here. And that's like the most bullish case I can make. So the remainder is like 343. So there's a huge amount of evidence right now locally because of the way this set up with this weird bowl shape. It took really long time to build out. We're talking about these potential like up thrust motions. There's no sharp bottom here. It bothered the crap out of me that there was no really good strong test down. I know we got some wicks down. All of them were on really light volume. Nothing looked like a definitive bottom to me. And that's okay. Sometimes accumulation can end in a bit of a whimper. But every step of the way, it's kind of taken the road that's slower and weaker. So it's not taking like this kind of rapid fire buy-in like we saw last year. Well, it's just waiting. It's waiting for something. Okay. You know, we can go on and on about this, but again, just looking at this simply as we can, this is a really big problem zone. And if it can get above it, great. But it doesn't take a whole lot to imagine that this hits that 340, which is a hook level, and then reacts down. And then at that point, it's very simple to see that this is also like a rising parabola. And what normally happens is that when you get to the top of these is that you have a pretty big pullback. So I've measured it out, and as far as I can tell, the most reasonable thing I can say to you is that, and I'm also going to talk about this red line in a minute because this is from the comparison, is that this is still pretty likely that it gets up here. But unless it has like a backup and it comes back down to like 320s, and I'm stressing 320s because that is a very, very critical zone, right? There's the initial hit right here at like 321. It's going to be probably the most important zone in this area, right? Probably. Unless it holds that 320s, it's probably going to come back pretty low, in my opinion. At least down to 265 again, lo and behold, right? And then potentially even lower, and we'll kind of get into that again in a minute. That's the only place I can kind of see this really working out. Well, what if it does that into Friday, and then Tuesday it just goes all the way up to 4? Yeah, I mean, it wouldn't surprise me to be sitting at 320 on Friday and not know. And that's the 30th, that'd be the following weekend, I guess. But this is also something where I'm like, meh. I really can't find there to be a strong reason, at this point. I'd have to just see it happen. Because I think this is one of those sticky zones. So if this is a sticky zone, it's a lot like what happened over here in this sticky zone, okay? Or over here. It may be that you look at this and you say, well, I think that's the M cross, and it's just going to drop and then have this big pop. So maybe you're right, Booksy, it comes back to 265, but then I think it's probably going to go all the way up to 4 after that. I'm not going to say it's impossible because it's like what happened here. When this advanced really high and then has this deep retracement, it does it like 2 times and then it goes all the way up. And we would probably look back at that example and say, well, it's kind of like this, where you have maybe a little bit of a curve. So maybe it just needs to have a really deep pullback and then it's going to pop to 4. Yeah, maybe, maybe. And I don't think it's out of the question. And I'm going to leave it open for interpretation because, yeah, the next motion would be, if it continued to just kind of mirror out, the next motion would be, in theory, to come up pretty high, at least the 370s, maybe 4. And it would make sense to go up there and hit that level. So I'm going to leave that open to your interpretation. But I also have to say that even if it did that, like, I would still be in the back of my head worried, because normally once you get to that second M right here, if it fails, and that would be like the second M here failing, you have to then just sort of wait and see what happens at the top. And then ultimately, you don't necessarily know that the reaction is going to be even paced. There could easily be another expansion here, which is not something that I don't really want that to happen. I really don't want that to happen. So I'm hopeful it doesn't happen. But just like back here, when this M failed, it expanded outward into a larger wave. Now, when I say expand, you might be thinking, well, that means it's bigger, right? So it's just a bigger version of itself. Yes and no. it's still shrinking on the biggest possible picture, which is kind of confusing. But like on our small time frame, yeah, it looks like an expansion because it's like this little wave now is turning into a big wave. But on the big picture, it's actually still shrinking. Okay, that's the mode, the way it's directly moving. Okay, so then I did this comparison, and I looked back here, and I noted that it would have been easy enough, and I'm not sure this is the best example, but it would have been easy enough to compare it to this region here as opposed to what I did the other day, which is compare it to the end. And part of me was like, well, why did I compare it? I just couldn't even remember. I was like, well, why did I even compare it to the end? And I was like, well, I compared it to the end because I think predominantly because of this. Because I had seen this whole motion as a downward motion, which makes sense. But I didn't use this guy. And I mean, I did and I didn't, I guess I should say. Because this is a backup that goes back and checks certain levels. And I sort of just took for granted that this was already done. Maybe is the best way to put it. Also, looking at it in like grand scheme of things, it seemed to me like it was done because this hits a low twice, and this is actually the lower low. And so if you look at it as like, oh, it's a build out down, this is the lower low, then this is the rest of it right here. Makes sense. Sure. And I started thinking about why would that be the case? Because that's like really backwards. And that's completely different spots on the schematic. And then it just kind of goes back to what I was talking about earlier. The reason that was so long-winded wasn't so I could just pad this time more, I promise. It was really because it occurred to me that like, well, you do see that motion right here. Like, it's the same picture. It's just that you're wrong, like that it's over. Like, you think this is the end, but it actually does it again. And why wouldn't you? Because you've seen it twice. So you're thinking like 1, 2, 3, 4. You're thinking it's over, right? That's the end. And the next one's up. And then when you put everything else in its place, you're like, well, it seems very likely that this is where it happens. And then when you compare it to itself, which we've done before, you compare it to like this region, it's like, yeah, it seems really likely that that's where that happens. All that's still true. And there is still a move going up here. There's no doubt about it. When you look at the RSI on the 4 hour and tell me there's not like a big move up here, there is. It's there. It's just not doing exactly what you expected it to do, which is kind of like this massive pump. And instead, it's kind of curving outward and upward as if it's trying to reach a level, but not doing so in a way that necessarily gives it like this kind of hyper commitment, I suppose. So there's different kinds of comparisons. So like one comparison would be to say it's this area. Both of these are correct. That's what I'm trying to say. And that's going to frustrate the heck out of some people because both of these are technically M2. Like they're the second M shape. They're the second part of the wave. This one just finishes with a micro and then does it again. And again, you're like, well, why would it do that? Because it's still iterating. Like it does another iteration. It's like saying, again, like that because you've seen the cat ear, it'd be like saying, well, this has happened. You know, you think that it's over right here. And you're like, oh, it's done. That's the cat ear. But in reality, like what you've experienced is you have experienced a cat ear. We just talked about this a minute ago. So hopefully then now you're going to kind of see the click happen. What you really did experience was, yeah, you did experience that, but it's really the first here. Do you get what I'm saying? I think hopefully you get what I'm saying now. So you think that you're done because you saw the whole cat ear and you're like, there it is. The whole thing's there. Now you're going to build back out and do the final like move here or whatever. So you assume that it's actually wide, it's finished. But in reality, you really just did this section. And so you think, oh, it's over, but it's not over because this actually still has to do this whole second cat ear, which sounds, again, kind of bonkers, but that's the way that this thing sets up sometimes. And it's like, it is bonkers. It doesn't really make sense, but that's the 1, 2, 3, 4 that we talk about. So it's like, man, that's a lot to process. Yes, it is. And I think that it boils down to this schematic, which is it's not that you're wrong per se. If you think this happened, it did happen. There was a wave breakdown there, like for sure. It did happen. The problem is that it depends on the scale of the hole, and ultimately, like, even if you were right about this, and it shrinks down again, it looks like it's kind of repeating it on the back end. But in reality, it just hasn't even nested it yet. And when I look back at this, that's the way I would often look at this, is like, well, this in and of itself is its own cat ear. It's kind of a crazy huge one. But like this in and of itself is its own ear here, right? And then nested inside of that is the same thing here. And then nested inside of that is like the same thing again. And it just kind of keeps going. It's not a forever thing, but it's certainly like one of those things where it's like, goodness gracious, is this ever going to like stop? It's a good question. This is actually like right here. Right? And you're like, well, what the heck, dude? How can you ever possibly manage to track anything if you can't tell? I think it's exactly what we're doing right now, which is to kind of acknowledge that there's a possibility that you're wrong, that you were not experiencing kind of the first or the last section, but you're experiencing sort of a middle section. And so instead of like saying, well, you're on the second part already, you should be seeing that upthrust, saying, well, we may not be on the second part already. And then how long does that take? It could take quite a while. So there's a problem in that when you look at these things, this diagram is wonderful. But they are also at the same time like extremely mischievous, I should say. That's kind of a weird way to put it. They're designed to make you look like an idiot, basically. To make you feel like you're completely lost all the time, in some ways. And I think it would boil down to, in the long run, just being aware of like, I may not be right about this. And if there's a desire from liquidity standpoint to continue to take it a certain direction, I have to be willing to say like, well, what happens if this is not what I think it is? And instead it's this build out here, for example. What would that change? And how would that look on the major picture? So on and so forth. So what I did is I took it and I just kind of broke it into simple parts, and I looked at the mirroring. Excuse me. And I looked at the mirroring, and I looked at the some of the halfway points on the S curves. And what I determined locally here is that I don't really see a huge reason at this point, even though I've talked about going to 4. I could easily say that this is, and it has been, I have already said this a bajillion times on here. I know I have. I could easily say this has been a sticky zone since the beginning. And I knew in the back of my head there was probably really good reasons beyond just all these intersections. And that's really what it is. It's this right here. So I'm not going to do a RSI comparison or anything like that. So I'm going to kind of get rid of this. So I'm going to show you the comparison now. And I'm going to show you why I did what I did. And we'll see if I can do this without getting rid of the trend lines, although it might be kind of difficult to do. I did this in such an odd way. So this is like a really simple version of everything going on right now, which is good. It's always good to have simple. Okay. And then here's like this long, low path. I did this without you guys because I wanted to see what it would maybe look like without throwing the rest in there. And I actually just said that I wasn't going to do this. I deleted the wrong thing. So hold on just a second. I meant to pull those trends out, and then I didn't do it. That one. Nope, not that one. Where's the last one? Is this one? Nope. Where are you, trend? You are not there. Oh, it's below it. Okay. All right. So again, this is like almost needlessly frustrating. Okay. But I went through and I did an examination of what would happen if this just like had another iteration. And we were wrong, and this is not the final cross down, this is the first cross down. So instead of saying you're here and it's going to drop and go into like a spring motion and then leave, which made the most sense. I still think it makes the most sense, by the way, if you're wondering. Does it make more sense to do this or the other thing we talked about? The other thing. The idea that this drops into a spring into August makes the most sense to me. Okay? So please hear me say that. I'm going to repeat it if I have to repeat it. But I do need to be conscious of the possibility that this is actually going low, and it might go higher than expected. You know, there's some parts of this that still don't make sense to me. Don't get me wrong. But I just did the measurement anyways. So what I did is I went in and I looked at what happened here initially with this drop in. And I'm like, well, that's pretty darn similar, right? Is that those particular drop-ins look almost identical. Again, apologies for like the middle, right? You have this low and then it builds back up into this kind of ridiculously high push. Then it drops down low. The easiest way to describe this would probably be with color coding. If you're colorblind, I'm sorry, but I'm going to use reds and greens and stuff. So why, Booksy? I just am. But this first section is where the drop down is. This tends to be pretty close to the move in the end. It's not like perfect. Usually ends up being about a 50-50, meaning like it kind of goes below X amount and then above X amount. I should say that instead of 50-50. That's kind of confusing. But the idea here would be that you didn't actually make, that this is kind of some weird like extended version of the same thing. And you didn't actually make the final low, you made the first low. So instead of saying that you're actually at this March 23rd region where it's going to do this S curve out and then break down into a final spring, which we could prove that. I mean, we could say like we think that's going to happen. That's the fun thing about this. That's also frustrating is like you can totally find it because the sequence is all there. It makes sense. The iteration is all in here. The whole thing, I mean. And we actually did that before. I showed you guys the side-by-side. It looks right. But that makes sense because this would be the same. I just demonstrated that. I spent time talking about it. And I just showed you why that's the case. So if you're following along and you're kind of tracking a little bit, you probably understand that at this point. If you're not following along, again, this is probably just going to seem kind of frustrating and annoying. But I get that too. I do. I get why that would be frustrating. I was a little bit annoyed myself. I was like, ugh, here we go again, But the idea is that if this were the same thing, could you actually make a case for it if it were early? And I can make a case for this being early. So what I did is I took stuff like the triangulations of like the 60% or whatever rebound here. There's a 60 to 60.77. So I was going to explain that red line. That's actually the same thing we're doing here, like from the peak to the bottom, peak to the valley. This one has two valleys, so I use both, but you could use one or the other. It doesn't make a huge difference. They both work out pretty darn well anyways. So I could pull this in and pull this up, and it's still going to look like it's in line. That's what I'm trying to say. The wave is more of an estimation anyways, the trajectory. But there you go. So trajectory in, trajectory out. It's matching. And likewise, you would expect this to kind of match upward. And it does. Again, depends on how you want to define like these bottoms. You could do that. You just tell me, does that look like it's matching trajectory out? Answer, yes. Then that's all there is to it. It's not really that complex. This is just meant to be like, hey, is this reacting like a wave would? It is. And that's what happened back here. is the initial markers from the downward motion in the same spots? Like, are they roughly in the same spots? So I was going to use RSI. Let me get rid of this. Are they roughly in the same spots? Yeah, they are. When you look at them side by side, you're going to feel like, oh, there's nothing else that's possible. This has got to be the right thing. Yeah, somewhat. I think that you have to be a little bit careful with that because, again, I could put some other stuff side by side and make it look like the same thing. But certainly, like, the markers are in the right place. And if you look at what happened back here with this setup, very, very similar in terms of where that build out is. You know, there's some things that are a little bit different, but on the whole, that is about the 50% marker between the bottom and the top. So if you look at where this is on the drop down, you look at where that bottom is here, and you look at where the bottom is here, it's just a 50% marker. Okay? That's the same thing that you see in this zone as well. If you take that and build it out to where those drop zones are, you find that that's like a 50% marker into the bottom. Do right here. Right at the top. Okay? So on and so forth. All right? So what I did is then I really spent more time measuring out what would be considered like, all right, well, what happens though if that's the same thing? And again, with the understanding that like what that means is that this wave is longer than expected. What would that mean for the bigger picture? So I just did some simple things where I like went through and looked at, all right, where's the breakout? Where would the lows be? Is it consistent with where I think the lows should be? That kind of thing. And the kind of the short answer is that, yeah, it's consistent because if you look at where that middle is, it's still mirroring out. I have this for some reason widened out, and I won't talk about that in a minute, but that is consistent with what you would expect for the low, which is where this came back down, you know, ultimately into a bottom zone. And this does have a pretty steep drop. There's some differences in directional movement here, and we could again get into like nitty gritty. One of the things that struck me as plausible though was that concept that like back here, I had made arguments at that time that this was essentially like an iteration of August right here, even if it didn't look exactly the same. And most people didn't agree with me. They thought a lot of people didn't agree with me. They thought I was just kind of saying crap because I could say crap. But I was actually looking at this comparison right here, saying that it's the same exact comparison. Like you're doing the same motions, you're trying to go back and hit the same markers. And the reasons they look different is because the levels are in different spots. But ultimately, like this is essentially like an identical setup, not just because they look similar, but because where they're going back to, these previous markers, they're going back to check the same thing. So they're just setting up bottoms in the same way. Proportionally, it's the same. So I was making an argument it was a shrinking iteration, and it is. And I'm doing the same thing right here. Like, it kind of struck me as like, well, you're kind of doing the same thing you were doing before, and you have that same kind of argument. So it's possible. It's possible. And you did the same thing. You technically did the same thing. So we would be saying that, again, that's what I was saying. You can swap one for the other. It could be this kind of a motion, and you think that it's going to go all the way up to 4, but in reality, it's only going to go to like 340 or something at first, because it doesn't need to go all the way, potentially, if it's a smaller iteration. Much the same, where this is going this full span, of course. This one doesn't need to go that full span. So on and so forth. Yada, yada, yada. So, I think, this is my theory, okay? I think either is possible. I don't think one over the other is necessarily true. Because I think that if you went up here, it wouldn't be inconsistent with the overall picture because you still have a drive back down. We've already done that so many times. You could just have a compressed iteration going down into July and then break out by August or whatever and be done. Maybe if you had gone down first here and dropped, you could have even had like a June build out and it still would have been consistent. You would have said this already happened, and then it's building out an S-curve to the upside, so on and so forth. All of these work because they're all just the same thing. It's just different scales. That's probably the easiest way to phrase it. They're all the exact same. It's just different scales. Like you're picking out different chunks of time. And again, if that's confusing, then I would just say go back and rewatch that earlier bit where I was talking about why that makes sense, because the wave structures don't change from small to big. They just look different in terms of scale, but they're really the same structure. So you could be misreading it thinking it's a big structure. It's really a small structure. And that happens all the time, especially with fractal analysis, right? It can be really dangerous. So where would this go back to? And that was another thing, was like, okay, I had these S-curve targets that hit like 340. Where would this go back to if it comes back up? And it's the same idea, because you have like, again, it's weird because you have like two different, this is the part that kind of got me like, oh, that's funny, is you have like two really different outlooks here, but then depending on which measurement you use, you get really different outcomes because they didn't set up in the same spot. So this is where I'm like, ha, I kind of make this ha sound with my voice. I'm like, ha, this makes sense, because, and why this is so confusing, because there's not a single answer. Because in the previous time zone, or in the previous time frame, this actually does go all the way back up. They both check that top zone. But here, this never went back up. It didn't go all the way back up. So on the one hand, you would look at this and say, well, this booksy clearly is where they're going to go back to, because he went back to it here. So why not go back to it now, right? Clearly they're going to go back and hit this level, because that's what they did back here. They at least came back up and checked that level, right? You may even say like, hey man, it probably was even going back up to hit this guy or this guy, the pink or the yellow right here on the left side. You'd say, oh, it's going up that far. Where would the pink and the yellow be? Well, probably yellow would be here and pink would be like right here. Something like that. I mean, those are like pretty consistent levels with what we've already gotten, 430 and 415. Nothing really interesting there. It's just kind of like, okay, well, this didn't happen there, so maybe it still happens here. I mean, this did go all the way up. Yep. Here's where things get kind of fun, is that if you then take the same exact idea and you're like, all right, well, what else is being compared here? It's like, well, technically this came back to, if you look at where this is, wrap around, and this is very evident, you know, that this was a really strong widening motion around the that anchor point, that when they came in. Which is, again, where is that anchor point? Pretty simple. It's at 322, right? And that 322 is a breakdown zone here. Now, this is where I'm like, huh. Like, technically, this comes back up to there, but then all it really does is it's widening out. And the question would be, like, was it necessary to go all the way up, or was this just a liquidity grab to go up? You know, and so that they could come down lower at that time. What is that? I don't know. You didn't do that back here, and we were saying that they were basically the same thing. This actually narrows and then expands. This just kind of comes up and expands like immediately. And it ultimately is wrapping around what number? 322. So the question mark in my brain is like, does it even have to come past 322? Was it necessary? Because this is really the level that's being distributed along. And then if you look at the middle, technically it's just like popping up and around the middle. Kind of ignore the markers, this is where it's at, right here. Also, the 4-hour moving average, it's like chopping up and down around the 4-hour moving average. That's right here, it's in this zone. So the only thing we could say with certainty in terms of commonality is that these are in the same spot. Like, they're roughly right here. You wouldn't say that it has to necessarily go to the top. This didn't go to the top of the trend, which is 4. You wouldn't necessarily say it has to go to the pink or the yellow, although that'd be nice. That makes more sense when we think about it as a massive like single move. That made a lot more sense to me, right? And then coming back down. So that possibility is not gone. It's still there. I mean, I'm not like saying that's gone. It's not gone. But certainly like that would make sense. If you're going to go back and check that $4 level, just have the big pop. Done, right? Yeah. But then if you just look at the other comparisons, it's like, is there really a reason to do that? One of the things you would also say is like, if you look at where the distribution happened here, it happens like in the same spot that this was really peaking as well. So it's not enough just to say like, well, it comes to this level, so it's going to come to that level again. Proportion is more than just one part to one other part. It's one part to all the parts. It'd be easy to say like, well, this comes up to the pink line, so it's going to go all the way up to there. That's simple. I get that. There's not, liquidity wise, that's not really an argument. You're just kind of saying like, well, it has to go back to check something. Okay. Find out what it needs to go back to check and see if that's true. Is it still doing, what it needs to do? I don't know. Good questions. If it sounds vague, it's because it is. And we've talked about this before, but we've talked about how like some pieces on these earlier examples that we use are very flat. Like they're extremely horizontal. And then some are very angled in our current time frame. They don't really make sense as flat. I think this is one of those examples where it was clearly used. This was clearly utilized to drive the price up in order to drive the price back down. And it definitely does what we would expect it to do, which is it has a little bit of an extension here, and then that extension is expanded on this side. Like they're both there. So it's doing a good job of defining that range. This did not travel all the way across, but then again, it also didn't sell down that low. Why? Because it's not the range values. It's just different. It's also not as weak as this was, apparently. This was really, really weak. This goes super, super low on that drive. And by the way, later on, that comes back to bite us because later on, that drive is like kind of where we end up, way over here. If you look at that trajectory right there, seems ridiculous because you're like, well, there's no way they could have known that. No, I don't know. But they did, right? Like, I would argue it's actually going here because I think that's where it's supposed to be in the future, right there. That it's the shift value, but I will digress there and not waste time with that. So anyways, so I'm looking at this like, all right, so there's reason to suspect it could come all the way up to 4. There's also plenty of reason to suspect it doesn't need to. And when you look at the timing of it, it certainly seems like the timing is almost expired. And that's one thing that's not really that negotiable here. There's a sense in which once it gets to kind of the end here, and I kind of did this wrong. It should be over here. That's why I added that extra red section. That the end would essentially terminate right there. So one's like an inner section and then one's an outer section. And if you're wondering, like, was this also symmetrical? Yes, it was. If you look back at this, again, in the simplest of terms, you could say this was highly symmetrical in the nature in which it kind of traverses tops to bottoms here on these. It even hits the same markers on the trends, right, in the walk up and the walk back down. All right, where are those at presently? Well, I mean, the good news and the bad news, right, is like this is another way to look at it. Is like, man, you really could make an argument at any given point that it's really following like a parallel structure, in which case this is pretty dang weak. I mean, I hate to say it, but it does hit that marker and take off, just like this one does and this one does. The idea of this coming all the way back down seems very offensive, maybe in some ways, but it's like, could this come all the way back down and hit, 265? Yeah, it could. You're starting to see like why this is starting to become more and more relevant. It's like, oh, so this setup really has like more than one outcome possibility, and it could potentially terminate as quickly as like tomorrow. I said Thursday at 4 a.m. on the Discord because when you do the S-curve measurement, it's Thursday at like 4 a.m. Like, I don't really know why, but it is. So you think it's going to gap up tomorrow morning and be at 340? I'm not sure. I'm not sure it's going to do that. I don't like saying stuff like that, but I do think that the S-curve is right around there. And the latest that I could find a draw out was Friday at noon. So I did as best as I could. There's just not really anything much to go off of here except for this initial push. But that's as far as I could take it reasonably. Well, why not just wait till Tuesday when it's 4-day weekend? I don't know. Maybe they will. I don't really care, right? The point is that the fact that this measurement right here, if it terminated on, like, let's say Thursday at 4 a.m. or whatever it ends up being, if this starts pulling back down at that point, you could end up coming right back down to this particular marker, which kind of meets the expectation of coming back down here. It's really far. Well, that's interesting, I guess. Yeah. I mean, the thing is like, it doesn't just stop. You just keep going. And you can keep this analysis going as far as you want it to go. I sort of did it in different parts. So I'd have to kind of redo it again because I'm moving stuff around constantly. So maybe that I have to do this again. But one thing is that when it got to the bottom, we were saying a minute ago, well, why can't it just hit the bottom and then react? That's what this does. Hits the bottom and then goes back up. Well, what if that happened? What would we say? There's probably a number of things you could say. You could say, well, it's mirroring, so therefore it just kept mirroring. That would be the easy thing to say, I guess, is that, well, it hit the bottom and then it just mirrored out. I guess that would fit. It fits the bill. Someone else would probably look at this and suggest that, well, I think it just went low here. You were just off. It didn't actually, it didn't change anything. And this is the lovely part of fractal garbage, right? We'd say, oh, we just did that. It's not different. It's the same. And it's the thing is like, it doesn't really matter. It's an open door possibility, but it's also a possibility that this doesn't go farther again. And I think that's a very real possibility, like that this hits the top and then reacts down and doesn't go again. Certainly seems possible. When I did the measurements outward, it would have suggested, I suppose right now, the way that I have this is a little off because I think I did it again in two different sections. So I might even have to redo that. But it would suggest that this could technically come down after this bounce. You know what makes this kind of really frustrating? Is that this is June 6th. Like this is June 5th and 6th. And I think there's an expectation that a lot of people have that it's going to run really hard around that time. I've heard that number a lot. That is that time. Like that's the timing for that low, potentially. Whether it holds up high and goes again or it comes down low, I don't really care. The point is like it really makes almost no difference. If this were to hold up high and it goes here versus come down low, it's like either one sort of makes sense to me. And both of them could have essentially the exact same stopping point to some degree, right? Certain things change. Maybe the time you spend up here changes, that kind of stuff. Well, which is it? I don't know, man. Back in this time period, I don't think most people thought that this was going to come rocketing back up. I think at that point, I remember thinking it was pretty distributive, and then it changed character. It came back above the creek, and I was like, well, it's probably going to go. So what do we have? We have lines that kind of support that? Not really. The biggest one that we have, I think, is this guy. And this is sort of the main trajectory. Like there's not really another, like right now we don't have really clear creek lines. The rest of them are all parabolic. And if they drop, you're going to have like all the different ones fanning out right here. You've got one right here, there's another one right here, there's another one right here, and there's another one right here. You're going to have like a dozen of them, half a dozen easily. Sorry, but at least half a dozen, like 6 or 7 probably fan lines. None of those really help us in doing an analysis. They just give us possible places of supports, and that's it, which is fine. There's nothing wrong with that. It's a good thing to have. It's just that I feel that this makes sense in some ways if you're going to have this kind of extended move to have the backup into June and then just run it on up. this reminds me a lot of the one model we talked about where you have like repeated up thrusts that have really, really weak or that have really steep pullbacks. And this is one we drew about a week or two ago, if you remember this. And what we said was that it might have up to 3, but it probably wouldn't be more than 3. And that would look similar to the 2020, and that hikes your on balance way up before the drop. So sure, could it be either or both? I think it's, again, they're not mutually exclusive. And that's the thing is like, you really have to sort of watch the temper of the stock and see what is going on in each of these motions. I could tell you though that conservatively, there's no reason really to go beyond 340 something right now. Conservatively. Except for the fact that I already have like a lot of these targets and I know that they're important. If I'm being like hyper conservative about it, like I think that, well, I'm going to pick the lowest number possible. Frankly, you could have already said it's not going to go past 317. But I think the idea of 348 is a weird number, but it was like right around 348 or something. I may have been like 341. It was really close to those really bizarre numbers around 340. But it's actually kind of simple, I think, because if you take into consideration like where this drop down happened, anytime it broke above this, it runs like pretty far. You know, it has an extension above it. We haven't even broken above 321. So my thought is that as soon as it passes 321, it almost doesn't matter if you're willing to just say, I'm okay with that as a price target. Because anything above 321 at this point is pretty bullish. Like it's already been bullish is what I mean. Like that's a good push. And that's comparing it to what happened here. So I'm not trying to go around in circles just to say there's no answers. Well, the answer is that marker right there. It's the 321 marker. Like that's kind of the answer to all of this. If it holds the 321, I don't see why you wouldn't have a big move. And also, if it moves and it just keeps going, then you're good. But you're going to eventually have a burnout around 4, in my opinion. I don't really see 370 as super strong unless it hits later. I think if it hits later, that's a stronger possibility. But I do see that 415 up here as a possibility if it hits kind of early. Makes sense, kind of matches the overall trend here. But everything would really hinge on coming above 320. So you may be kind of frustrated and say, well, I don't really get this comparison. I don't know where you're going for with this. What's the point if we're just going to be kind of stuck in limbo forever? Well, I'll take it a step further. So what I did is I went to the extreme. I was like, all right, let's say that this doesn't go up high and it breaks back down. And you have this kind of waveform. I think what I did is I did this on extended hours, and that's why it's not. It needs to be in extended hours. That's why it's not lining up. Sorry. I was like, why is this all these numbers are like, everything is like off by a bit. Yeah, I think because I did it in extended hours, that's screwing with it. Yeah, so that's why this was all the way over here. I was like, something's off. This should not be that off. Because a lot of this move, this is also an extended hours chart. A lot of the stuff you're seeing is actually extended hours. So when you use the measurement with extended hours, this doesn't hit a low until like end of June. So it's a lot slower. I know. You're like, this screws everything up, Booksy. Yeah, it does. Yes and no. Okay. It does and it doesn't, because when you include extended hours in the measurements, you got more time on the screen, so it looks a little off, but they're not actually off because you're including more time in the downward motion because technically there's more time. For whatever reason, when you do extended hours in TradingView, like your box won't scale based on the time. It stays the same based on points on the screen. So like left and right, this now looks really wrong. But this was correct with regular trading hours. Why? Because it doesn't scale wide. It doesn't pick like a beginning and an end point. It picks like it just takes like the size of the box. So as a measurement tool, it's a little bit limiting. And by the way, the same thing applies for the actual measurement box. It doesn't scale correctly. So I don't know why that is. I think that's a dumb oversight, but whatever. I'm not a programmer there. Because I would have had it scale proportionally, like based on when the box starts and when it ends. That way it scales out. And instead of just staying in the same spot based on like a left anchor or a right anchor, which would by default screw it up. It means you have to have like two completely different charts. So anyways, I did the measurements for this. You can see that I'm moving them back. I was trying to like, in my head, I was like, I don't know how I got these so off. I did them different ways. I remember now because I did the extended hours first. So long term, if this were to kind of iterate and fail, let's say it doesn't go up very high. It only goes up to maybe like at most, it comes up to here. I don't know. It doesn't really matter. Somewhere between like 340 and 360 or something like that. We'd still probably look back at that and say, well, it was a good buy-in. We'd still look back at it and say, well, let's look at on balance and see what happened. What happens next would be very, very important. If it goes into a low, it could be a spring. And then this is where things get extremely dicey, because I was like, all right, how do you measure this? This doesn't have a rebound. Like, it does go there, but I don't know if it went this slow because of the Judge Zern decision. I really don't know. There's no real way to know. All I can say is that, at least in this comparison, it's about 2 times the length of the original move. That's it. That's all I can say. I can't say that it should be 2 times the length. That's a completely different statement. All I can say is that it is 2 times the length. So if it's 2 times the length of the original move, then this bottom would be in June and the top would be September 15th. All right, Booksy, but you said, I know what I said. You said it was going to be up the top in August. I know. I'm aware. There's one particular piece, and like I said, I can't tell you that for sure that is the correct measurement. This is a big question mark in my brain. The lurking variable is the news here because of APE and because of, frankly, because of APE and because of the Judge Zern thing, I really have no clue. This could be that this was double time because of that. I can say this, though, and this is very interesting. You'll find this to be interesting, I think, is if you look at the symmetrical measurements of this and you take this bar from the drop down, which is what I did here, to that first support, that's usually the level I look at when I see this as like a diamond structure that widens and then breaks. I would look at this as a breakout normally right here. That's usually the way I would measure it. I wouldn't actually measure it out like that far. And I actually think I did this wrong. Again, I'm trying to get this thing right. Why is that box so huge? Booksy, trying to be all prepared and all your charts are whack. September 8th. Something like that wouldn't make a huge difference. You're going to like this, though, I guess. If you look at where earnings is actually in the middle right here. Why does that matter? Well, let me put it this way. If it's going to run, right, what has to happen? It's probably, we think that it's probably going to have a spring. Oddly, this spring goes to like 236, which I think is really strange, but I think it hits like 236 because that's the number that we thought equals like $1 or whatever, right? That's the bankruptcy argument for AMC, is in my opinion, it's 236. It's only worth $1 a share or something based on the market cap. Original market cap, not where it is now. I know that's not actually $1. I'm aware, just comparatively. So this is an interesting argument because you're like, well, if it does the same thing again, earnings is actually like right in the middle. It's essentially like the same measurement out. So if you take into consideration where this drop in happened, and you go through the middle here where that spike low, that is actually right where earnings is, which is important. Why? Because earnings is usually a catalyst of some kind. It doesn't always have to be like the end-all be-all catalyst. It doesn't, right? But what's also interesting about earnings to me is that most of our earnings have been kind of like centered, not completely, but at least initially, like coming from earnings here, we were actually coming off this middle. And then right after earnings here, we're kind of going up towards this middle. And if you look at where earnings was back here, same deal. We're going kind of down towards the middle. You're starting to see this trend. And if you look at where earnings is here, it's right here at the middle. So what you're trying to say is that's the downtrend. Well, yeah, but you already kind of know that if you're looking at the chart, right? My point is that earnings seems to gravitate towards this like center marker pretty regularly. And I think that that's probably not by accident. It gets a little low in this area for sure, but it does come right back up. I mean, that middle zone is 316 and we hit it. So right after earnings, within a couple weeks. So on the whole, you can see these two are on basically on top and these two are kind of right below. They're using earnings almost as a way of kind of like reestablishing where that middle is. Like every time, it seems like you're either pushing away from it or you're coming back to it, which is pretty fascinating to me. So what about this earnings right here? Based on this model, it actually makes perfect sense because if it is a double-double, which again, I'm not positive that it's going to double up, it would make the most sense to be here around earnings, which is very low. But what's also interesting about this, perhaps, and it may be a bit unfortunate, we'll see. This doesn't really mesh with anything else, so hear me out, okay? I know that doesn't really add up to anything else that we've already talked about. This, if it breaks down all the same, would mean that somewhere in September, again, around September 6th, which I went back and I looked at this and I was like, well, in the earliest builds, I would say that September 6th probably wouldn't sound that bad to us. That's where this thing breaks down right here. It's on the 5th and the 6th. Now, I've said previously that we technically entered this zone, which is true. Right after the drop, we entered this zone on August 25th. So I thought the 2-year cycle was August 25th. But September 6th is also a contender. I mean, you could argue that. I don't see why not. We left that zone right there on September 6th. Now, I like to see if it makes sense, right? So I'm like back testing to see like, does that even make sense? Yeah, I mean, it does. The fact that this could potentially be done by September 6th then makes perfect sense. So what are you saying? You're saying that's it? It's not going to go anywhere? Well, Friday is the 5th and Monday the 8th. And I think Monday is usually a better day to assume any kind of upside versus a Friday. This to me would be very like bearish, right? I think if we looked back at this, we'd be like, well, that's garbage, right? You can clearly see like Booksy, if you do the same thing, it's trash, right? This doesn't mean anything to me. That's good. It would look like a gigantic set of distributive cat ears, and then it would drop down again. Yeah, I'm with you. But remember, like this hitting like 236 or something like that, and then coming back down means that you've left that 180 something on the toilet stranded, right, without toilet paper. You might come back with some toilet paper later to come back to 180. And I looked at the way this traveled, and this is again, it's all speculative. Don't freak out if you're like looking at it like crap. Well, one thing that is worth noting here is that if you come back and you look at this as a trend, this actually does a really good job of gravitating back towards this trend. And we've previously talked about this being like the model, oddly enough, before I kind of messed with this trend the other day and like looked at these trend markers.
We sort of talked about this being the model for what we would see as a transcription, perhaps, of what happens here. If this goes to like 4 or whatever, and then drops down, I took it and I applied it to the upside to see where that goes. I was like, where would that be in like the, backwards land or whatever? And it's right here. And that is very interesting because that's the previous high level right there. So it's like coming back to retest, the previous low level. It's like coming back to retest the liquidity there near the bottom. But it's also, if you look at it on this trend that existed, it's also a back test on the middle of the trend, which is very fascinating to me. I'm like, well then, more evidence for 4, right? Yeah, I mean, it is more evidence for 4. It's a stronger piece of evidence for 4, as opposed to just hitting like 3 something, Likewise, though, this is also a back test. So we're talking about these like as if they're mutually exclusive, like they exist in completely different realms. They don't. If this chart shift is correct, and I think it is, then these are actually really close to the same spot on the same thing. I mean, it is. If you look at it, you can see this zone right here and this zone right here would be anchored on the same, essentially the same parallels, albeit at this point it's now shifted down lower, meaning it's like on the bottom rung. Yeah. And then you can see that then the compression here, this idea of coming up high here and high here to hit the same parallel marker, really plays the same tune in the current time frame. And interestingly, it's that bottom. So it's like you're iterating by like squishing down. And these are parallels that existed back then. So I'm going to delete that so you can see it a little better. So you can see that the interaction here is playing to the same fiddle. It's not a completely different song. It's the same tune is what I mean. The same fiddle. You know what I mean? It's the same beat. Stop trying to make music analogies, Booksy. Got it. This makes sense to me then, that this may only go to like that marker, which we were talking about, a 340. Both of them seem pretty true. So there's this clear blanket zone between, I think, where it would be like a retest on the middle, which again is consistent with the 370 to 340 versus a retest on this kind of new center mark, which is the sort of a smaller iterative version of that, which is that 330 to 340. It's compressed. It's not like way different. The numbers sound very similar, but they are different because of where this is set up. Okay. So I don't want you to think that these are somehow exclusive. They're not. But the idea of it like kind of doing the same thing on this rung, did it here and then dropped off. If it does it here and drops off, the reaction that you might expect is, well, crap, it's going to go off the face of the earth. But this is a big, big difference. Like this had a massive chart shift in it. I've talked about this a lot. This has the reverse split and then the ape coming back together, blah, 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 blah. I would not say that that's actually correct. And if you ignore, like that it should have been that far, if you ignore the overall, which I've done plenty of times, if you ignore the overall chart shift, and this is the red, this is where the chart shift is. Here, I'll show you real quick. All I did was copy it, put it there. There it is, okay. It actually makes a lot more sense. Everything here makes more sense. This to me looks correct. Like you're coming back to hit the middle here, middle liquidity. Could be a number of little spots in here between this value and this value, which is the same as saying 370 to 4. You can see that very clearly, right? It's also a backup right there. It's also a backup to, again, like obviously in its own time frame, the areas in the beginning that were established as sort of a middle liquidity, which matters. And it's a backup on this trend coming down in the middle. And it's a backup to some of the earliest liquidity levels that we have on these lows. It doesn't quite get all the way there. It could. I don't think it needs to because it's already tested those. But it would come back up to this zone right underneath. Hey, are we going to go back to these values? That's an important question to ask. The operators are going to do the same liquidity checks. They've kind of already done a lot of that. Arguably, they've been chopping along that zone. And that's why I think, hey, it makes sense to go back and test it again. Definitively. None of these, again, exist in a vacuum. And if you go back and you look at what these are these back tests, they're always going back to check liquidity. In this case, it's like, oh, we're going to go back and check that liquidity. And in this case, it's like, oh, we're going to come back and check this liquidity here. These like walk down levels before you advance, quote unquote. And it's the same thing in these time frames and checking like much the same things over and over again. Back test, back test. It's like backing up. It's not really complex. So I look at it and I'm like, yeah, that makes sense. I'm not seeing any inconsistency. What I'm trying to say is I'm not seeing any inconsistency with the way I'm charting this right here versus the way you may chart this right here. Except that perhaps this has come lower right at this point. It's like in a different set of parallels. Interestingly, perhaps to some, is that set of parallels going backwards. Remember that liquidity thing we talked about with the on balance volume? Look at what parallel that is, right? That is exactly where the on balance checks are. Here and here. That's the on balance level that we were trying to get back to. That marker, amazingly, if you look at it from that point of view, that marker is essentially this guy right here. It's the same mark right here. It's just shifted down 226%. We're kind of bouncing on it. It's like you're trying to get back underneath it right here. That's what all this is about. It's like pushing down to get back underneath it. So unlike what we see back here with this massive sell down, I don't think that this setup is the same. It's flatter, I think, for one. It's not quite the same in terms of like the downward motion needed. And look at where that liquidity band is. And it's just, everything kind of like clicks into place better if you think about this as an upthrust with a downward motion. But this is where I kind of get to, where I'm trying to get to right now, is if you didn't go, which is what this comparison is saying, is if you didn't go down there right away, then that means that you have to come back up to redistribute. So now we have some rules. Now we have some idea of what this might be about. If you have enough liquidity on this pump, if this hits high on balance and it drives the price down low to the expected region, even if it doesn't get all the way down there, if the on balance does, I'm like, good, right? If it comes down into July or June, July, and it's down here at $1.90 or whatever, to me, I'm like, that's it. It's good. I think it made the move that it wanted to make. I don't think it's going to need to distribute again. What's fascinating about the comparison that I did yesterday, at the end of the day, is that it works. Because if this doesn't go down on the first move, just like when this came down right here, this didn't go down all the way. Didn't go down far enough. It goes up and it just creates a new distribution. Without making it sound super complex, this is a cat ear, right? But one of the things I've mentioned with cat ears is that a lot of times at the very, very end, like the final ear, so that we look at this as 1, 2, and then 3, 4, is a lot of times on the final ear, you've probably heard me say it, sometimes you'll get this crazy upthrust that goes all the way back to the previous tops. And it happens. I think I've drawn it out like so, where I've said sometimes you'll get to this like last cat ear and it has this like upthrust and it goes back up to like this guy, essentially. So it makes you think it's going to break out. It could be like a triangle and it looks like it's going to break out. I kind of did that wrong. It'd be like this. Let me do a better job. Where it does like this final upthrust. And it's almost always, it's a head fake for one, so it'll make you think it's bullish because it looks like a triangle breaking out. But it's also just going back usually to this value right here, which is exactly what we see in this one. It comes back up to that value right there. Why do that? Why bother? Well, because for whatever reason, you're not going down first. You're going to take it up first because it's needs the liquidity to take it down. Usually there's a sign of weakness here too. That's the crazy thing. And I think in this case, it's right there. You know, there's a little sign of weakness right here. It's so consistent that it kind of hurts my brain, because this is exactly what you'd expect to see. You'd see this like weakness, and then it looked like it's grabbing, and then it pumps up, and then it dumps back the other way. And so people are like, oh, it's a fake out to the downside. It's a bear trap. But it ends up being a bull trap, and people are like, I don't get it. It's perfect, right? It looks like a 1, 2, 3 kind of triple flush motion. But it starts with the sign of weakness, right? Now, do we have a sign of weakness right here? No. But that's what I'm saying is, like, if you got this, A, it didn't go low enough. B, it now presents itself as a sign of weakness. And C, it then makes sense why you would maybe stop short of a run here and drive the price back down. So the good news about all this is that this is not unpredictable. Meaning, yes, there's some confusion still about whether or not this goes all the way up. But in my mind, I kind of can see it as a really simple sequence of events. Like, if this doesn't come high enough right now, and then it just barely goes below, I think I know what we're going to experience, which is a longer term distribution, unfortunately. If, however, this does go quite high, you know, and it hits 370, and then it drives the price down to 180, I think we're in a good spot. I don't think we're going to do this again. It wouldn't make a lot of sense, because if the target is met, the target's met. And that's what I'm trying to illustrate. I know I went a roundabout way to do it, and it may seem a little bit concerning, but it's like this particular diagram does stink. However, this particular diagram also would still abide by the exact same rules that we've already experienced. And I measured it out, and it definitely looks to me like a shrinking iteration here would probably lead you into January of 2026. Oh, well, that's still time to run. Yeah, it is. And I know that in the past we've talked about it, and it didn't seem very likely that was going to happen, like it would stay low that whole time. But I did mention yesterday, it's not impossible with the way this thing's moving. If this drops down again, because you have an accumulation phase here from like $1.90 up to $2.75, sure. Would it be a smaller iteration of this whole picture? Sure. It's just not as high as expected. Would have expected it right here earlier on. Instead, it's lower, or it seems a little bit lower. This is still like the 180 range. Look at where 188 is. It's just slower. Well, then what? Well, honest to goodness, I don't know how exactly that could happen, but honest to goodness, if that happened, I would still be like, yeah, I don't know how this is going to work, but I would actually still be very bullish about it going up into February, which is kind of crazy. I don't know. But if it really did happen this way, that's the way I might even see it, because the compression there is ridiculous. And you don't need to travel any of the distance between like 13, probably at that point, roughly 13 down. You might have to spend like a minute right here, but that's it. And then the rest of it is like, well, what about the rest of it? We got to trade that, right? Do we? Maybe not, you know? So it doesn't change very much, because we've already traded it. I mean, it was like years and years ago. But you pretty much have like a straight shot back up to this like 35 range. I don't know, Booksy. It seems like too long-winded. It seems a little too much. I'm with you. I mean, I think it's crazy. But do I think it's possible? Sure. If it took this long down here, I think it's possible. That would look distributive, but ultimately it's like an accumulation that began probably right here. And it goes from $4 down to $1.75 over the course of a year and a half. That's a humongously long time. It would have a huge cause built up. Do I think that that's likely what's going to happen here? Like I've said before, I don't really find that to be the most probable. This doesn't make the most sense to me on the grand scheme of things, but again, it's there. And I think there's just a nature of like knowing that the cat ears themselves are not, they're not rigid. Like they represent one particular idea that ultimately is part of a bigger idea. They represent not just the iteration, but the smaller iterations inside the iteration. So you have to just take into consideration the possibility that you're looking at the wrong thing. So part of the issue with this is this didn't ultimately do what was necessary to drive the price low. So it doesn't drive low. Instead, we just create a sign of weakness and then we just continue on our day. I don't find any of this to be inconsistent. Some people are going to say, well, it's super inconsistent with what you said before. You were thinking it was going to leave in August. Yeah, I know. And I get that. I'm with you on the idea that it's not the same. Like, that's kind of obvious. Like, no, it's not the same thing I said. It's not inconsistent in that it still follows the same methodology, which, again, probably bothers some folks. I get it. I'm not a big fan of it either. In terms of like prediction, I'm like, this is kind of like a whack way of predicting things. Remember, every one of these things had early markers. It's the early cat ears that really define. And there's another marker right here, by the way. There's early markers that define on these walkouts, these M crosses, 1, 2, 3, 4, 1, 2, 3, 4. These are the markers right here. You're losing ground in those middle zones between the M's every time, then it's bearish. It's not typically going to go your way. We're not really there yet, but we have some indication that that's true because you have these weaknesses. 1, 2 right there, right in the middle, it's losing ground. 1, 2 right here, it's losing ground. Those weaknesses are there. As it's going forward, you could say that they've largely continued, and you need to see a change of character. At some point, that's not going to happen. This is one of the best examples where it's like, well, did it happen here? Yeah, it kind of did. But it wasn't like super bad. Like it wasn't horrible. But did it happen here? It did. We're getting to a place where we're starting to see less and less of it. I would say that this probably is a little bit of a weakness right there. But the good news is that, of course, this did not ultimately make like a lower low at that point, like in the bigger picture. But is that weakness right there, that this came down below that support? Yeah. Yeah. That's what tells me that this is very likely, even if this runs up hard, and it probably will, have one more pop in it, that even if this runs up hard, and I say probably because I'm not 1,000% sure, but even if this runs up hard, I think it's going to come back. I do. Because even in the midst of all this, it continues to show us that it's possibly going to go down lower. So what are we watching for exactly, Booksy? If you're doing this comparison, do you now think that this is the new model? No, I don't yet. But I also think that we have to just, again, consider like possibility. And so is this possibly like the new model right here? Yeah, it's possible. It just depends. Like, the way the liquidity is setting up right now makes me question it. I have a lot of questions about the on-balance volume on AMC, like a huge amount of questions. I have a lot of questions about it because it's doing things that just don't really look like they work to me. I also have questions because we had talked about this as well. There's a layup value right here that's possible that wouldn't necessarily not fit with 2020. We talked about that, I think 3 or 4 days ago, that there was a issue with the on balance being maybe a little too on the nose. We were like, well, you could not definitively say that it had definitely crossed a certain creek yet. So this could easily be like a creek jump right here. And on balance would look similar. Like it would jump up and then come back down and basically be flat. And then it would go into a big buy-in period, right? From essentially June on to September, August. And it's looking bullish, but it's actually quite distributive. This chart sucks, Booksy. Yeah, it does. And some people are going to say, well, why not just like do that and let that be the spring? And then when it hits here and it just takes off, right? Why not do that? And then it could go up here. Because that could still work, right? It just has to do with this, man. If this is a SOW, then no, you know? And there's no one size fits all for this. At some point, you're going to have to sort of take it into consideration, like, is it a spring? Is it not a spring? Right? That kind of deal. But I'm telling you right now, like, it's not unpredictable. Once you get to that point, there should be easy enough ways to predict this moving your direction. Like, there will be, like, cross trends like this. For example, this should be exactly where it would be, like, almost exactly. This is what it would look like, because you'd have a push up and then it would kind of weakly get over the top of it if it's weak. And then it would push away, but it would distribute and come back down through it. When that happens, you'll have you probably have a gap here, and there'll be an additional triangulation, because they've done the same thing every time. They leave a gap, and then they triangulate it with the hook value. That doesn't happen. So they create a hook value, but it doesn't happen, and you end up distributing away from it. I don't know if that's just because the bulls are losing and they're trying to get there, but they don't, or if it legitimately is like a trick kind of trap value type deal. But you would have like a trend here somewhere in the mix. And I don't know, maybe it ends up being this guy. It ends up being like super high strung. I'm not really sure. But you'd end up having some kind of like a triangulation here, and it would lead you back to some gap value. And this would be like a weakness. So there'd be a trend built here, maybe even both places. Perhaps it's this guy, maybe because this drops low. It generates, if it goes to like 265 or something, it could generate like a trend. And that would tell you approximately when this takes off in the future, because the triangulation would tell you when you're going to get over here. And when you get over here, you'd be above the creek finally, like the major one. And in addition to that, you'd probably have some kind of like a widening here, like this, that would also triangulate the creek. Like, I'm not building this without these things in my head. So like, I'm making sure when I do stuff like this, in my brain, I'm making sure that like this has to make sense. It can't just be complete and total nonsense. You know, this makes sense. Another breakdown at 335, multiple trend walk downs, so on and so forth. A new top here, if it hits 360 or whatever, then you'd walk through that. You'd have distributive function. You'd have you probably would have a bigger walk down right here like this. Now that I'm looking at it, you come back down to the bottom here, finally hitting like the lows that you're going to hit, 180s. You build out. This time you do the up thrust and the downward motions, but you come back and you land on top of this creek. And this is when it finally has like the change of character. So instead of this shape is really familiar to us. That's the last iteration. It's on top, and it doesn't make a lower low. And that's what tells you the buy-in's ready. And that's what we want to see here if it comes down hard. So this particular example might seem a bit out there because you're like, well, man, you're doing a lot of charting for a whole lot of nothing space. I'm aware of that. But what I'm telling you is that this model of charting, this kind of movement structure, would be highly consistent with what we've seen in the past. It is not at all inconsistent with what we've seen AMC do in the past if it doesn't make the proper drop now. If it doesn't get the proper and appropriate drop now, this is the perfect delay structure. And you could delay it. And I do think that whatever happens over here going into 2026 could be something phenomenal. But ultimately, like, it would be horrible until then. This is very different from pretty much everything else we've talked about. But it also is highly consistent with what happens in AMC if it does not make the spring here. Okay, and that's the big picture, is like, if it doesn't make the spring here, then you have this as an SOW locally, another a real sign of weakness on it in itself that brings it up to distribute again, but back near 4. And that's the delay structure. That's exactly what happened in the Judge's Earn thing. And it would be essentially identical here. And timing-wise, this is correct. So timing-wise, this builds out the same way. I could not tell you again that this has to be doubled up. I also couldn't be 100% sure that this doesn't just break out and go in August, which is very frustrating. But what I could say is that at the very least, you have some kind of padding here, right? Because if you only bought, let's just say you only bought $4 strike for past September, like September or October. So like, if you only did $4 strikes for after mid-September, that would insulate you from this possibility. I'm not saying you have to do that. You get whatever you want to get. If you think it's going to go to the moon in June, buy what you want to buy right now. If you think it's going to go to the moon in July or in August, buy what you want to buy. But I'm saying if you're feeling like unsure about it at any point, you think that, well, I don't really buy this as the spring, then this would insulate you from a possible like failure. If it rockets, these are going to explode anyways. If it rockets before then. But if it only ever builds out to that point, you're not screwed. You're not. And even further is just like, again, that March, April 2026 being like the safest bet. And shares only. So make no mistake about it. This is a distribution. This is a distributive function right here. Okay. What I've just shown you is like what happens if it distributes in order to trade below 230s down to 180s. What would a distribution look like? That's what it would look like. More than likely. We're not talking about a spring. We're talking about like a full-on. And again, we are talking about a spring on the big picture. Sorry. We're not talking about a spring right now. Okay. We're talking about a full-on like longer-term distributive action to drive the price down. So make no mistake. That's what I'm really illustrating here is like not a simple, like we've already created a bottom, we're now going to dip below it, but a distribution from 185 to, excuse me, I keep typing it wrong, to 239. That's really what this is, this chart. So this is one that I think it's debatable. If no spring here, sorry, I meant to finish that. And this is essentially what happened in the Judge's Earn thing. The other models that I've talked about are about a change of character happening before then. Okay? The other models that I'm talking about are a change of character that happens before then. So what this is this is just a back test on liquidity that then drives the price into a sign of weakness, which then turns around and goes back up to distribute. Then it takes the road that looks really bullish to go distribute, but it takes too long and it's ultimately pretty weak. And it has a kind of this S-curve appearance to the upside. That's the long road. And yeah, it's messed up because it doesn't really abide by the other rules we talked about with the 2-year cycle. But man, I mean, I've said it before. I don't really like this as a 2-year cycle in some ways because it doesn't match horizontally. Because like previously I looked at this thinking, well, it doesn't have to match horizontally because you could just rocket to the moon anyways. You're just going to meet up with that target in the future. So who cares? There are parts of this that do. Like this kind of meets up. This bowl shape right here kind of meets up. Even this motion right there, all these kind of meet up if you like stretch them out. You know, you can see like, oh, it's walking through those areas. They might exist. But you've heard me say it if you've been around for the last year, that I've been kind of cautiously wondering if this is actually like I don't know how, because I don't even know how to draw it, to be honest. But I would be cautiously like I've been cautiously thinking about it. I was like, what if this is some kind of like an angled version of the same accumulation? And we think that this was supposed to go to 8 because it had this really nice curve, but it only ever goes here because it's really weak. I find that to be plausible, and I don't know how to draw it, so I can't do it right now. I'm trying to like doodle it, but I really don't know how to draw it. But I find it to be kind of plausible because we had talked about how like in 2020, if you look at the breakdown, it's flat. There's a rise back up, but it comes back to the same levels. It doesn't have this bizarre like shift down. Whereas like where we are now has this, you can see it right to the side, but I'm just going to illustrate it over here. Right where we are now has this really bizarre like shift down. And that's why it made it difficult for me to do the comparison to 2020 because I was like, that's not there. It's not in 2020. There's no shift there. So part of me is like, I wonder, you know, what if there is like a shift? I don't know how to draw it. But that arc that we're looking for, everything's in the right place. It's just, we think that it has to look like this flat sideways business, but it's actually like really flat sideways this way. In which case, the question is, does this then make sense as a, you know, as a structure? I mean, it might make perfect sense to have this be your big on balance buy-in and then go into like a spring. Some of you guys are like, I don't get it. It's the same thing. It's just at an angle, you know. That doesn't look the same at first, maybe to some folks, because like I don't see that. I don't see how it could be that. 2020 is very different. It has this very straightforward approach to the drop in, and then when it does drop in, it's extremely like vertical, very like linear in some ways in those established levels. This has all been like angular, like downward pointing, as if it's building downward, not just sideways. So that 2020 model, everybody's assuming, like I am, that this is the floor, and they're not assuming that, and then even taking into consideration the possibility that it's actually establishing a floor at an angle here, like through the middle. That would be very different. Very different. So we're kind of all stuck in this like 2020 mode of like, well, it can't be the same as this, right? It's not the same thing. I kind of think it is, though. I really do. I really do think it could be much the same. It's just like a stretched, weird version of the same thing. And the point would be this guy, I think. You'd have to make the comparison, you'd have to try to find the comparable creek cross and the breakout. So again, the only difference being that this is positioned like downward. Like that. So therefore it goes down instead of being like flat. So this one goes essentially flat. And it does. Versus this one, which is, again, like positioning like downward. Like this. It's food for thought. It's tickled the back of my brain for the last 2 years. And I know most of you probably don't remember that, but I have said it several times because I'm like wondering about, it's not important for me to prove that I said it, although I probably could, but I've been wondering about I just want to tell you that this isn't like new. So this isn't like a brand new idea, but I have been wondering about that as a possibility. That we see a whole lot of weakness as it presses towards a dollar value down here. Yeah. I don't want to deal with that either. If 180 is 180 a good spot, if GME breaks out, that doesn't change anything. Honestly, no, it doesn't change anything. I have the unfortunate problem right now is that I've been steeped in this for so long that I just remember all these things like way too much. I can pinpoint areas on the chart now at this point because I've devoted so much of my memory to this, which is ridiculous because it's just a chart. But no, it doesn't mean anything. Not right now. Because the concept of GME squeeze, the way that it's been presented to everybody is that it's being presented as like this inevitably like huge move, that it has to be this like gigantic move to the upside all of a sudden. But that's not really accurate. If you look at the original squeeze, it is not like that. The move doesn't come out of nowhere. It actually built out for like 6 months. It's really slow. I don't know if it's because people were not in GME and so they didn't have that lived experience, but it builds for a very long time. So the actual big move itself, which happened in January, that's the one everybody talks about because the buy button removal. Look at the time period that leads up to it. It's 286 days of more or less just mirrored upside. This is not insignificant. Don't get me wrong. It's significant. But if you look at the trajectory of what happened here in 2021, this is like 36 degrees right there. This is 36 degrees right there. This is not inconsistent with a very simple understanding of the market as like waves and moves in and out. You see this? It's extremely straightforward. What changed with GME is that here it went away from this concept of like it's going to go bankrupt to we've got the buy and hold mentality. The squeeze is already happening by 2020. Wait a minute. I thought the March drop was the thing that puts it into an accumulation. No. You're thinking of AMC. Most of you are smart. I'm not trying to belittle anybody here, but some people don't seem to understand that like GME was not, it didn't have this like long extended accumulation period after the COVID drop. It literally jumps the creek as soon as the COVID drop is done in April of 2024, and it doesn't look back. The rest of that time, that's it. That's the creek jump right there. That's the spring. That is not the case with AMC. It is not the same. The rest of this time is spent in a buy-in period. If you look at where we are, if you were to even think remotely that you're in the same place that you are right now, okay, that you were in 2020, and you said you think the squeeze is going to start right now, maybe Roaring Kitty's right. Maybe it's going to be this big pump up 1 and then pump up 2. If that's the case, perhaps AMC does just run. But I've not said that's not possible. All I've said is that I can see a lot of different possibilities, and I think it's worth being prepared. Because the other possibility in my mind is quite simple. And it's a very simple possibility, which is that this time period hasn't actually happened yet on GME. What we have done is we've established possibly what we could argue is like something like this. But around $24. I think you could say that this could be have been established at like 24, right? Why? We've talked about those waves. This is an up, down possibility. It's just as simple as that. And when I look at this as like a wave, I'm like, yeah, that's sort of what we're doing right now on GME, but we're hoping that we don't go down again. And that would be like coming back through $21, $24 area. But 21 specifically is kind of the lower end on that region. We've been tracking this possibility that this could go down low on GME based on the build out. But notice that just because it goes high here and it does break out does not mean it just shoots to the moon. The rest of it is like a build out period. And again, this is a really long period of time. This goes from August 2020 through January. Arguably, we're talking about, let's count it, August. If it began here in August, you could say maybe the end of August. So maybe you don't count August, but September, October, November, December. That's at least 4 solid months of just rising accumulation. 4 months. Since it broke the top. So it did not go like right from here all the way back up. In this case, it looks like it goes from like $1 to $4. It wasn't that at the time, but like it doesn't just go straight up and keep going. It takes 4 months. 4 months. And I've said it before, I'll say it again. You want to know what AMC was doing from September 2020 until January? You already know the answer if you've been here for a while, is it was going down for that 4 months. It went from the top of its range all the way to a new low on the bottom. It went from the highest peak that it had made in that range all the way to a new low in the bottom. So, why am I speaking slowly? Because I've said it before, and I don't know why people keep asking the same questions. You need to pay attention as best as you can. All right? I'm not saying it's not possible, but it would be very silly for me to look at this and see that wave cat ear, and just because it goes up instead of coming back down, then assume that it's going to immediately go up and start racing to the moon in June. It is very, very possible that it takes a long time. If you wanted to make it like more or less like 1-to-1, if you look at this and you think that's the spring, which is pretty darn similar. I mean, I know that the charts are messy. We can do a quick comparison without the stuff on the charts. If you take this as the same idea, okay, let's say you think this area right here, this is like the low and this is like the final region. You think that's like the same general area. And I don't really want to sit here and like go through step by step, but we'll just kind of take a look. If I can find it. It's like so far back on this chart. I think that's it. Let's say you thought like this is roughly the same kind of region and there's a build out that's about to happen. This could be thought of as the creek jump. It could be thought of as like this final push down right here. It doesn't really make a huge difference to me. However you want to think about it. Probably wouldn't make a humongous difference. Well, let's just say you thought it was this and it's building out and up. First of all, this would just say like, yeah, we're going to hit like 32 and then maybe come back, which we've talked about possibly. You would be looking at this saying like, I think it goes up to 32 right now if you thought it was this area right here. You'd think, oh, it's going to go up to 32 and then it's going to have to come all the way back down along that creek, probably into September. And then it's going to build out into January. I mean, it's certainly a possibility. Does that mean it's going to be going down like AMC? No. But if this pops right now and it does something very similar, and I'm not going to be able to draw it. As soon as I put something down, this stuff comes back. But if you thought that was like the 1-to-1 area, you'd be thinking this is going to hit like 30 something and then just sort of slide. And that numerically kind of makes sense. This is April, so it's a little late. But you'd be thinking it hits here and then goes down probably into September 8th or 9th. And then breaks out right before then. Even if you were looking at it like that, you would be like pretty discouraged by the fact that AMC is way behind all that. It would almost imply that AMC's barely even made its real bottom at all, because the idea is that this isn't even like close to being September area yet. So, you know, the whole idea like of the 1-to-1 bits, most of that probably stems from the options chain and not necessarily from the technicals, but I would just suggest like, hey man, there's no rule that says once it comes up here that it has to just keep going. There just isn't. But this is all part of a squeeze motion. You know, it is. I would say that the fact that it took more time coming up at like 26 is better than what happened back here. So therefore, there's certainly room for, you know, the argument that it doesn't take that long. Maybe it only backs up that far. That's fine. You could probably also take a look at, because I mean, it's spent more time trading it already, which is great. It's already traded this zone down here at like $26 to $27. So it's good. Is that a creek jump with a backup? Yeah. If you look at this schematic, I know there's a lot going on here, but if you look at this schematic as just like a creek jump, it's like right there. So popping and then coming back down wouldn't kill it. It's pretty similar, but it's not what's being proposed as like some kind of massive squeeze move that goes to like 200 all of a sudden. It's instead like a longer build out for a squeeze right here. So if you were really doing like some kind of drawn comparison based on that, that would be maybe an argument you could make. That this is establishing like a new floor, and that if it holds above that floor, and this one actually comes really low, it comes all the way back to this level here at 23.98. That this could actually come all the way back down to 23.98. Maybe by July, and then pumping up into not quite the same timing, but pumping up, you know, into August. or September. I can't stress enough how like that's not inconsistent with this. Like if this pumps up here in September and then drops down from September all the way to January, it's extremely consistent with the idea that we're in a similar section. I don't even think it would necessarily be that way. I would have imagined this has already happened, which is what I said earlier, like that this already happened, that this was the September style move right here. It's already going down. And that's why I've said that I think it's possible that GME is already in that motion of building out. And it may not do this, which would be very one-to-one timing-wise, be kind of strange. But the idea of this taking that long may seem a little bit absurd, but if you check it out as like a possibility of a near one-to-one, it doesn't really not add up. Kind of makes perfect sense. And then you'd have this kind of build out from here up to the top, and it would take a while. There's another long-standing creek right there. So that'd be one that you'd hit. And again, it would take a little while. And this would build out into January. And then you'd have a massive January run right there, where you break above this high that was made at 60 and then race to some new all-time high. That's extremely one-to-one, but it's also very consistent with what would be maybe expected here. What if it's already done that? What if it's already done the jump? Well, then we're already in this position. That's what I'm trying to say. Like the motion here is not that complex. This is a creek jump. This could be another creek jump. There's nothing really like convoluted about it. It's just, all right, well, when does it hit the breakout? I don't know. It's easy to say it just goes now because of the timing, but in reality, like that setup, yeah, that could be it. That could be the jump over the top, and then it's going to break out and start chopping up. That's what I've kind of got here, is like the chop up might happen a little sooner. And I still would say this probably doesn't go until August. I know we've been talking about July, but I think this would take until August. I've got a lot of noise on the chart here because I've been taking the iterative approach that if it iterates again, it goes up, holds an LPS, and then does again, holds up, holds an LPS. And that's sort of like this guy right here, where it's like pumping up, holding, pumping up, holding. And it would generate like a creek cross to the upside. So to simplify, you would just take this and say, I think it could go up, and then basically walks up this way towards August, and then breaks out in August, which is kind of a strange time to break out. But that would be consistent with what we think on AMC as well. So it's like, that's not really like wildly inconsistent either. How can both of those be true at the same time? It's like a Schrodinger's cat thing. Because unless you can mind read again and know the future, you don't really know for a fact that you're in the right iteration. What looks more right to me is it's going to take longer, and that's unfortunate, but it is true that would mean that the AMC chart is going to take longer. But has this already made the jump? Yeah. I've said before, I kind of think in some ways it would have been better to go ahead and get that downward push because it would establish where that floor is really definitively. But we keep kind of working our way up on GME. I get the feeling like it may even be in this situation right here, you know. And of course, there's good news there because like AMC, this has a lot of ties to the future. This is not in a vacuum by itself. This is a really powerful indication right here, right there, of where it may be in the future. I mean, it's a super strong indicator. We've got that on the chart. I never took it off. It's not as maybe like kind of in the middle as the other one. You can make it as like kind of steep or as weak as you want, I suppose, because you can use like the tippy top, like the bottom to the tippy top, which I didn't do. And that would be like super steep, you know. But I think that the way I've done it is pretty consistent with the waves. And so it really doesn't mean much. It just means 2026, February area. It looks like the right marker. maybe January 2026. So that's a how do you get there kind of thing. This did not go straight up there and do a double top. This kind of took a long route. So it would not at all, again, surprise me to see it take some kind of really long route to get there. I know I need to clean these charts up. Maybe I'll try to do that at some point in the near future. But it wouldn't surprise me if that's the case. The argument that it's like this kind of January thing would mean that this already is ready to go. It's about to chop up and then it breaks out. I still think that's not the right. I don't personally think that's what's going on. So I guess if that's what Roaring Kitty still thinks, I don't know. I'll be wrong or he'll be wrong, right? It doesn't really matter. I just don't think that's what's going on. So I'm not saying it's not possible. It is possible this thing could push up to the top. I just have questions about if it did go past 35 and it broke up to like 52, does it just continue? And that's a really interesting question to ask. I think that it, by default, to me, it looks like this hasn't happened yet. So even if it went up really high, I'd still be thinking like, you know, it could still take that whole time to set up. I don't see why not. Unless I'm missing something. So don't get me wrong, I'm really bullish on GME, I'm really bullish on AMC, but I still maintain that bullishness is fixated on early 2026. It cannot be fixated on these like interim moves. These interim moves are great, but the biggest possible move, it could be a very last minute thing. Well, Booksy, if it does move all at once in 2026, and GME goes from 60 to 200 in 2026, doesn't that mean that it's a January-June thing? Wouldn't that mean that AMC only goes halfway in 2026? And then you'd be wrong. It would not have gone all the way up to 30-something bucks in 2026, and you'd have a big F on your head and blah, 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 the dunce cap. I mean, it's possible. I could tell you, like, that every time I've done the 2026 model, I know that February is a point of high interest. I know that it's the most likely in my mind intersection. But that being said, is there other ways to draw that? Yeah, I mean, there's other ways to draw it. The gigantic S-curve, you know. And there's other ways to draw it because, you know, as much as I want to be right about it in the long run, it'd be great to have some kind of massive kind of win there, I guess. I think that would be beside the point. If my goal in life is just to impress people with call outs, then I'm probably going to be able to achieve that by, you know, I could probably do that a number of different ways, and I probably wouldn't use AMC. If my goal is just to make money, then I don't need to get it right. I just need to be mostly right, right? There's a sense in which I don't have to be 100% correct about this in order to be correct, you know? And there's certainly evidence to me that this goes through in the February 2026. In my mind, this is not really like a huge negotiation thing, right? Not for me. It's like that. One of the things I've kind of had to come to terms with is like, you have to just sort of decide where the middle is. And this is a tricky thing to do. It's hard to decide like where is the center, and does that ultimately define exactly where the top is? So the simple solution for a lot of people is going to be, well, the middle of this curve should be, the middle should be right here, right? But we know that that's not true, because in the case of like AMC, for example, it actually runs away high early. When you look at the market on the whole, the market peaked around January and started capitulating, right? Which is over here. It's pretty different. The market also broke out in September. So the motion itself finds itself a bit more consistent with the idea that, well, while it did bottom at the same time, it didn't top at the same time. You know, it's certainly possible that we're a little off then if we consider that like the middle. There's all kinds of like question marks, right, that come up. It's like, well, you should just do AMC's middle. I don't know. Did it catch up to it? Kind of. November looks like a good middle too, but that's not the peak. But it's certainly a possibility. And then you have to answer the question about, you know, I'm saying you because I've tried my best to answer that question, and I've measured it different ways. I've been pretty convinced for a while that I think it's February. But if I wanted to make an argument that it takes longer, how would I do that? I'd probably say February is a pivot, and that wouldn't be a cop-out. It would just be me saying like, well, I guess I got that wrong, you know. And what I'd probably do is use and say that's because it's still a point of high interest for me, no matter what. But what I'd probably do is use that shifted middle right there and suggest that something here, not as a cop-out, but as a way of understanding it, because I'd have to find a reasonable explanation, right, for why it changed. I'd have to go back to that region and explore maybe what happened, because I've been using this as like a parallel structure, and there's not really a need to triangulate anything else right there. I mean, this looks like April 2026 based on that. Again, just depends on how you do it. And it may seem really simple, like, well, then just draw the line up. Well, you could draw this steeper. That looks correct. That's actually where that is broken down. Well, that changes everything, doesn't it? Mm-hmm. Which is it? It's not as easy as it seems, I guess what I'm trying to say. Like, there's a sense in which, yeah, some parts of this are pretty simple. And then other things are like, I don't know, man. You could really pick and choose. And I feel like that makes it very, very different. Very different for a lot of people. They're not going to have the same answer. So my choice has been February for a long time. But again, you might look at it and say, I don't think it's February. I think it's some other time, and use a different parallel structure, right, to define it. This goes way back to what I called like the father of all charts, which was this concept of, you guys are probably not going to remember it, but it was this concept of, some of you might remember it, because I did the mother of all charts, and I didn't like that one because it was hyper bullish, so I retired it pretty fast. And I was wrong. I was very wrong. And I was still like learning phase with wave iterations and junk. The father of all charts was a similar concept, but it was this idea that it was walking down certain levels, and that when you looked at the overall picture here, it actually was doing much the same thing on these particular levels. Again, it's kind of a predetermined outcome based on the original angle, though. If you use one angle, it's very clear, it looks good. If you use another angle, it's very clear and it looks good. It's like the difference between using a parallel versus like a cross, for example. Because like in a cross, you would take this up and over, and you would read this as like, well, what's more important here is the cross down, like this. And the truth is that both of those are equally important. And they both would mean that you have kind of different outcomes. Well, when you get to the end, like you find that these are pretty consistent no matter how you do it. Like this, see how this drops in and that ends up being there. And you're like, wait a minute, they all look like they could be all right. Yeah, pretty much. This is the problem, right? So the father of all charts was an attempt to dissect this and say like, well, I think what's happening is that we're going through a similar distribution cycle that we did here, and we're going to do the same thing. Anyways, as you go forward, you find that these all have their own kind of good and bad sort of like run-ins. You know, some of the things here are like really, really strong. Some are not as strong. Just kind of depends on which one you use. They all work. They do. So then what happens when you get over here is that this creates a very widely different parallel structure. Like way over. So it's like, well, wait a minute. You know, that's super far to the side. That doesn't make any sense. It didn't come back there. No, it doesn't. It doesn't make sense. Well, which is it? I don't know. Maybe it's both. I don't look at the world. I can't look at the world of stock marketing through a complex web of interconnected trends and stuff. Like a supercomputer could do it, but I'm not a supercomputer. Like as much as I want to be good at stuff, I'm not going to ultimately necessarily have the answer. So the same shift value here is like the difference between December and December. I mean, that's a year apart. That's hugely different. Hugely different. So we're screwed. I don't know, maybe, or we're just in a position where we don't have all the answers. I was doing, I had a tree fall down in my yard. We had a big storm, huge storm, and the wind was going crazy. And I had this tree fall down, and when this tree fell down, it fell in the back portion of the yard. It fell towards the road that my neighbor uses to get to their house. Technically, it's a road. It's not a driveway. And I found that out a couple years ago because apparently the city has to come and fix it, which, you know, a driveway in our town, you'd have to fix it yourself. And it's listed as a street of some, but it's not, like, it doesn't have like a name. So I was like, I don't get it. Is it a road? Is it not a road? No idea. It's like an access drive. Okay, so the city will deal with it. Weirdly, though, it actually crosses through the corner of my property. So when I did a property survey, if the property is like a rectangle, it chops through the upper left box, which is the southeast corner of the yard, based on the way you would look at the property thing. Anyways, doesn't matter. The point is this drive kind of hooks through and it curtails over my property, and that's fine. I don't really care. I'm not going to fight about it because it's silly. I don't care. But the tree drops towards that line, and it dropped hard. And it was a big tree. Big tree. I'm not going to say it was like bigger than anything else around here, but it was high. I mean, it was as high as the canopy was. And it fell down, and I was out late at night, and I started trying to work on the tree, and my chain came loose because I was trying to hurry. It was right after the storm, and it was like 8 o'clock at night, and I'm losing sunlight, and I was like 8:30 or something like that. And I'm losing sunlight. I'm like, all right. I don't know if I'm going to get this done, but I don't want to be out here with a lantern trying to chop this tree down. The reason I was trying to hurry is because my neighbor has medical problems and often calls an ambulance. Like, it's happened more than once. And I got really concerned. I was like, now would be the time that they would probably call an ambulance, and the road's blocked. They can't get out of their house. It's my tree coming from my property that fell over, technically still on my property, but it's blocking their driveway. So I was like, I guess because of the way it's put out, I'll cut it down. So the chain goes loose. Anyways, what proceeded was about the next 12 hours was me staying up late because I found that there was all these other issues. There were things that I hadn't cleaned that chainsaw very well, and there were all these other little problems in there. And I ended up trying to fix the brake. The brake was messed up. And if you know anything about chainsaw brakes, you probably don't, but if you ever open it up, they're spring based. So there's a spring in there. And if you know anything about springs, we're not talking about like slinkies, we're talking about springs. They are notoriously difficult to put back in. And I ended up accidentally knocking it out trying to fix this brake thing. And I must have spent about 2 hours trying to get this spring back in. And what I didn't realize at the time was like, it was really late. It was like 11 o'clock at night. I was tired. I should have realized it sooner that the only reason this probably wasn't working is because I was really sleepy. But I went to bed and I woke up in the morning. And I woke up at 5:30. I was getting ready by 6 to go out, and I was like, I'm going to clear this tree out before they wake up. And I go out and I get the saw again, and I'm messing with the spring. And it takes me about 15 to 20 minutes, but I get it. This time I got it in. I'm already exhausted because I was up too late, and I was moving lumber, in the middle of the night. So I'm like already feeling kind of tired. And then the spring had really made me really hurt. So I expended all this energy and effort to put this silly little spring back in. And I'm like, all right, whatever. Finally, it's back in. The chainsaw chain is back on. Everything's like where it should be. And I go out into the back and I start doing the chainsaw thing again. It's early in the morning. I cut 3 limbs away from the road and I'm pulling them, and they're heavy because I'm really cutting high up the tree and dragging like big pieces away from the road. And then my chainsaw chain comes loose again. And I was like, you gotta be kidding me. I was like, I just fixed this. I've been out here for like 20 minutes. I've only done 3 cuts. I've still got at least 3 to 5 more to go. Big cuts, right? At least. I was like, but I should be able to do this. And I looked down and I had forgot to tighten one of the bolts on the chainsaw, which is really stupid. It's the thing that like holds the blade, which is literally what holds the chain or whatever you call it. And I'm like, I can't believe I didn't tighten the bolt. So it had wobbled loose. And it was because I was so fixated on that spring and getting that in that when I got to the end of it, I just kind of rushed through to get back out there, panicking that I was going to need to get this thing out of the road. I didn't take my time to do it. And I lost, not a bolt, but a nut, right? That went over the top. I lost it. It's gone. And this grass is too high in the back. There's tree limbs everywhere. I'm like, I'm not going to find this thing. And I'm not going to run to Home Depot to get a nut. I don't have one that'll fit it. There's no way for me to tighten this down and secure it so that the thing won't wobble at this point. So I set my chainsaw down and I went ahead and got a regular handsaw. I got my handsaw, my circular blade, my circular saw, which is powered, and my machete, which is quite useful for chopping back tree stuff, even though it's not the sharpest thing in the world. And then I spent longer than expected, a good hour and a half out there hacking up a tree with my hands and sawing it because I had to saw through my hands. And and it was weird because I just came back and I was thinking to myself, that's the whole story. It's a really lame story. But I came back and I was thinking to myself, like, I was so angry about putting that spring back in. I expended so much energy for that one little part. But then all it took was like a nut coming loose. And I couldn't even use that tool. This tool, which was supposed to make my life easier, right? that was supposed to make it simpler, but I hadn't taken care of it properly, arguably. And that was part of the reason that it all came unfurled anyways. Is I didn't have the thing tightened as it should be. You can't, yeah, your chain's supposed to be a little bit loose, but not like super loose, right? All of this because I wasn't like paying attention. I was supposed to make this easier for me. And I got so grumpy and so angry about that whole thing. And I was like, what did all that anger do? It did nothing. In the end, I lost a nut and I still had to do it by hand. And I expended a ton of energy in order to make my life quote unquote easier. And I was like, I feel this is probably one of those moments where I should probably take a life lesson from this. A little bit of humility goes a long way. Putting a spring back into a contraption that probably was done by machine is a very humbling thing. And then to then not be able to use that machine, even though you fixed it, was even more humbling. It was like, oh, all this was very Ecclesiastes. All was for nothing. Like, it was just in vain. I did it all, and it's done. Like, I still had to use a handsaw. I still had to use my hand tools and like my own strength in the end, which was exhausting. I was exhausted yesterday. And so when I look at stuff like this, I'm going to take that lesson. I'm going to apply it right here. And I'm going to tell you guys, without a shadow of a doubt in my head, that it may very well be, in the long grand scheme of things, that all of the work that's put into this might not come out the way that we think is going to come out. And in the end, you may have to go get the handsaw. You're very focused on fixing the machine, on like figuring it out to make life easier. But in the end, you may just have to get the handsaw. It doesn't matter. I could prepare for years and years and years. And it's true that I have done a ton of work. But in the end, if I get this one line wrong, this could be drastically different. Drastically different than what was anticipated. So, if you're going to take anything away from that long story, first of all, keep your chainsaw clean. Second of all, you and I, we both don't know everything, right? And like, there's going to be times where like you've done an immaculate job of preparation or a massive amount of work of preparation, and things aren't going to go your way. And it's not going to matter that you did all that work, even though you want it to matter. It just doesn't. It only matters in the life lesson, right? But like, it didn't matter that I fixed the chainsaw. It broke anyways because I made a careless mistake. It's like I'm back to where I was the night before. After spending hours and hours fixing it, I still couldn't do it. The same exact thing, you know? And I think that's a really important thing. Now, I'm not trying to be some kind of a guru or something stupid here, but I'm just saying like the idea of this as a wave synopsis is extremely important, and it's definitely in my opinion, all right, I would say that beyond a shadow of a doubt, in the end, when we look back at this, will we be able to say that this was some kind of a wave? Yes. And it will make sense. When we look back at it, there will be some kind of a 50-50 wave marker here, and it will make sense. It just will. Is it going to be in February 2027 or February 2026? It 100% depends on the way that you define where that middle is. And by defining that middle, the way that you define it, you're going to have the ability to like interpret what you think is the wave center, and therefore how long it is will be ultimately kind of like a doubled version of that. And every little inch that you move over here on the chart is going to add double the amount of time on the second half. So is it simple? Yes. This is very simple. Like drawing an S-curve here is not difficult to do. You just doodle it on the chart. Determining where the middle of that is based on everything that's happened with the chart shift, all of that junk, is that simple? Maybe not. It may not be that simple. How we decide how we're going to be when we get to that point, that's really what's going to determine, I think, what matters the most here. It's like the work itself is significant to me because I've done it. Being right about it would be cool because I've done it. I've done the work. But the idea that like I could be wrong, the idea that that work that I prepared could be completely off, like it should never escape me, is what I'm trying to say. It should never be like this thing that just doesn't, oh, it doesn't matter, it's correct. Well, I mean, it matters, but there's all kinds of things that create nuances here, right? It's like how you decide you're going to define this ultimately is going to determine the outcome of everything that you're trading right now if you think it's going to go back up. And then in addition to that, even if you knew exactly where this S-curve was, this is also like another one of these things where it's like, even if you knew exactly where this S-curve was, and you're like, all right, I think I know exactly where this is, so I think I know where it's going to land in the end. Even if that were true, you would not be able to necessarily predict that that's exactly where the top's going to be. Because this thing has had different times exceeded tops or moved opposite direction of tops. So it's like, it doesn't even really matter in some ways how much you do prepare, because there's like always a possibility that the top happens before the actual curve top. This is like a hook, right? So it makes it seem like it's going to hit that perfect point in time here or there or wherever it is. Well, yeah, that's true if it does hit the hook, right? But it's not true if it's just a wave, which is also likely. What I mean is that, like, yeah, this is rounded, this is rounded, this is not, this is not. But there's no real reason to think it has to do that. Like, this could also be this kind of, or maybe that's not the right way to put it, like that you could chart, you have to chart it that way. Like, this could also chart as a sine wave, Therefore, this could hit early. Chainsaws. Wolf is moving. It's up a little bit now. So I'm not trying to sell you anything here. I'm just saying, like, the idea of like the work itself must necessarily lead to an easier path is just not true. Dedication and focus are going to be the biggest things probably. And then ultimately, you're still going to have to kind of play by the seat of your pants sometimes. And I think that's okay. And a lot of people in the market don't want to do that. So they really want someone that's going to give them the answers. Like, I just want the answers. Just tell me everything. I'm like, If I had the answers, I would definitely try to give them to you. But I think the answers to me are like, they bring up other questions. Like, this is one of the answers that I would give is like, well, that marker right there at $64, that is normally where this would go back to. So just as an example, just showing you. Because like normally this is what I would expect, is that this would come back up here, and it does. And then it would go down here, and it does. And this is the breakdown right there. The rest of this is not what I would expect. It's way too low. That's very unusual. Even this still looks really low to me, but that's what I would probably use at least for now. And now we're basically iterating like the same thing again. Yeah, so on and so forth. So I would expect that that would be kind of like the motif that we would use, and that at some point in time, there's a couple things that would happen. So again, if I'm not sure about these uptrends, and I don't know which one to pick, I would probably say that a couple things happen here. Like, one, it will eventually come back to 64, or it's highly likely. And if it didn't hit 64, it's going to come back to usually where this drop zone is, because I haven't found an example where it doesn't, even if it's distributive. Okay? So like that's one place I would start, is like it's more than likely, like way more than likely, that this is going to go between 45 and 64 at some point. But there was a shift, and I have to think about that. So I have to then take into consideration, like, well, does that chart shift change those targets? So if I didn't have anything changed in the chart, I'd say, no, it doesn't. But my expectation would have been that if that wasn't shifted, yeah, and you've got this move right here, which is basically what happened, that at some point, this is probably going to come up. I might even suggest that this like has, again, another iteration in it, which is kind of what we're talking about. But that builds out and goes into an M cross, and then ultimately like comes up later or whatever and hits that value. Like there'd be some kind of an M cross here, as there usually is. So you can keep it as simple as you want to keep it. It's up to you. But I would say that this likely comes back up, hits here, finds its way across, and then does it again. That's the first thing, is like this seems very likely. It might come all the way up on the second move. It might even be like right there, right? But that in the end, if it's going to make an ultimately like bullish transition here, it's got to have like an LPS or something and then head up to the top and create like an SOS type deal. And that's that. And then I look back and say, well, does that sort of satisfy, the criteria here and yada, yada, yada? Well, maybe, it just depends on the way I drew it, so on and so forth. That has to do with that angle that we just talked about. Does it hit the low? Does it hit the high? Where is that angle set up? There should be a wave right here, but you've got two creeks. So the only thing that's, again, kind of like, if I were to say certain about this, is that this area from here to here should be breached at some point. And that's like the boiled down analysis of it. Why can't it just be like flat? Like, what if it's not angled like that? What if it's flat? Well, look, again, it's not impossible that that's flat. Surely, like, that's a possibility. Then it never gets there, right? Yeah, but even then, I'd still say, like, this is odd to leave behind. It's easier, I think, said than done, but you can go through and then look at the... go through and, like, look at a creek, for example, and, like, you can see what I mean. Well, what if that's the backup, Yeah, maybe. But like, how many times have we hit like a backup like this and then been really like just completely and totally like satisfied, like, oh, it's done, right? It backed up. Well, I mean, it's not impossible that that's done. I guess it could have been the backup that we really wanted right there, and it's never going to come back down. But I would say that like most of the time, if that pushed higher, which it did, you would say that that's what's called an SOW. And then again, it's like, just take a look at it, without this green crap on the chart. Try to keep it simple. Yeah, I mean, it's possible that that's done, but most of the time you look at this and say, well, that's positioned lower. It looks to me like there's some weakness there. Like it made essentially like if this were upside down land, a buying climax, and then immediately came in an auto reaction and made a low move. That usually indicates it's going to turn. It's like what happened over here when it dropped through. There's like a weakness here in like the build out. It's going back up to sort of distribute again, which is what this looks like to me. But then I normally would think, well, it's probably going to come back. Doesn't mean it has to go to like a brand new level, but again, like we're looking at this through the lens of creeks and creek crosses. I think even if you use the motif, you wouldn't say that it necessarily stops there. It could, but I think the bigger picture is just that it could. I always have to say it could. You just have to say it. But like normally it would. It would not stop. Like you would not just leave that behind. That's pretty unusual. So there's all kinds of question marks, because if I were to look at this as another chart, like as a bullish example, normally what I would be saying is that, well, it found the support it needed here. It broke out and came up, and everybody would be saying, well, that's just going to keep going. And you know me, I'd be like, well, I don't know, guys. If that trend breaks and it does some kind of like hook business here, I think it could potentially like crap out, which is sort of what we're kind of anticipating, that it could potentially just kind of crap out here. It depends with extended hours and all that jazz. Like, yeah, I could drop really low, try to get there. It's doing the hook business, so. But then I would suggest it's probably going to come down. And we have again evidence that would happen. There's markers in place that show, this January region being like a hot zone for sure for upside. But also there's a sense in which this is already developed. And this is where things get kind of dicey, I guess, that this creek hasn't been checked. I find this to be a tenuous argument because it's a difficult one for me to make consistently. Normally I'd say, yeah, that doesn't make any sense. And I would suggest that probably if this were to break here, it's definitely going to go, but it has to break here, which is around like 10 or 11 bucks. When I use the 2-year cycle on this bit, this is where I was like, oh, well, it seems to get up there before August 2026, which is where the intersection is on these trends. So like that's why part of the reason why that 2022 cycle, which matches very similarly to what happened here, this was also a 2-year cycle, right, from May to May, right there. Why it seems to make a lot of sense to me, because they're very similar in style and also in form. And it makes sense because if it's going to break down, that trajectory right there is pretty strong. That one's probably the best one anyways, right there, where it laid up on there. It's similar to where we see trajectories going in this direction on this model. They're not perfect. They're pretty similar, directionally speaking. I don't really like this comparison very much. For certain things, it's kind of like great. For other things, it's like meh. But that's roughly the same idea. It's not any different timing. It's just started and ending at a different date. But yeah, you would say that it seems very likely that this could have a similar motion if it broke here, that this could come up and then break out here. This looks huge, and I get that, but it's actually about the same length as this first one. So this first one's really short, So again, most of this stuff has indicated that like June or July seem very possible. If it goes like straight up, then it could be July, which is what I've been saying is like July 1st. That's why a lot of the stuff that I've hung my hat on has not been what we talked about early in the day today, which is like these smaller picture things. Like, I don't know, that could happen, but a lot of what I've been building it on, my assumptions on, if you want to call them that, is that this is still like quite bullish big picture. Are there any like major differences that might kind of throw a wrench into that? Well, yeah. One of the biggest ones is this. So while this is like an SOW of sorts in the upside down land, it does present an issue locally of a possible distributive action to bring it down low, which doesn't really happen here. This has like a nice, quiet phase B top, and then it goes back. This has this really gnarly, crazy pump, which sort of makes it seem like this could be more distributed than expected, right? And then it makes you wonder, well, is that pivot really what's going to happen then? Like, is it going to pivot that soon and come back up? I don't know. That's a change. You'd have to kind of consider it. It can't be just like assumed. Another thing is like looking backwards at this, and I'm not going to be able to draw this every step of the way perfectly, but like looking backwards at this has that parabolic kind of nature to it. Ultimately, like it breaks down quite a bit, and it does eventually like cross back up and over. We go through like every single one of these points and kind of examine them if you want. That's kind of the big three right there. But this is kind of curious because we don't really have that here. Like, it's not easy to identify, for one. But also, it's just different. This has a very distinctive, different kind of look to it and feel to it because of the way this thing sets up. Again, it's not completely off. If you use the shift chart, this is kind of where I'm like, I don't why this is so low. Like, it looks like it should be right underneath this. It would have been more sensible to have it sort of right on this top here, at least on the top of this range, and instead it's lower than expected. Does that mean I'm wrong about it? I don't think so. I think it just is where it is. What that could mean is that there's something to that, right? Like back here, this connects sideways. If you look at that marker, this connects sideways to that future breakout point. So maybe that means the same thing. Like, this is going to connect sideways to the future breakout point. And it does. So there you go. Proof's there. Look, Bugsy, it's the same. Maybe. I might be the same. Maybe it has something to do with this old trend that, was lost a long time ago. That also looks like the same marker. That wouldn't surprise me either if for some reason that was at play as part of this. And the next time that is a real sign of weakness, and the next time it drops through it, that would also be sensible. Yeah, I mean, that would work like this. That's a proper mirror here, too. It's a thought. Yeah, that gets you right to where you want to go. As an inversion goes. I mean, it makes sense. It's basically the same level anyways. In terms of like exit. I think one other thing that might bother some folks is like, well, this also backs up to these EMAs. I don't really have an answer to that. If you use this as an angular model instead of like a sideways model, but it's like more angled, like upward, you kind of have to go through the motions then of considering what those would look like shifted, which could be that, yeah, this happens, but if, for example, it dropped down to 188 or something in the future, does that mean that potentially like this stuff is all higher up, Well, yeah, I mean, that does make sense. You may not get what you expect in that outcome. And I don't really know what to say about that other than like, well, it's possible, you know. There's there's a wave here that would kind of delineate that. And then also that fact that this was like downward, still kind of strange to me. So where is the exit? I don't know. I really don't. I think it's meant to be like challenging. I guess if I had to like give you an answer as to why is it challenging, I don't really know. 660 could be one of the key levels coming back. If it shifts down low, it just changes things a bit. Yeah, it's some of this is just like a difference of directional input. That's what I was trying to say before. There's a sense in which this kind of comes sideways in more ways than one, and we did not do that in a lot of ways where we are. We kind of have there's nothing sideways here. Most of it's upward like that. It's like all of it's at an angle. Yeah, it doesn't, it feels like that's almost more correct to me. Like these two. See that trend? It just puts it on a very different path. Mm-hmm. You get the idea. I mean, that's not wildly inconsistent either. That goes to like 32. Which is the bottom here. It's not the gap fill, but it's like if you took the other stuff, like we just talked about it, if you took the other stuff and like shifted it down and you did the chart shift, like let's see what that does. It's probably in the right spot. I'm not sure how I would do that. You'd have to take it from, well, let me just measure peak to peak here. Let me just get that value again, that 226 value. Yeah, that's like coming up and zoning through here instead. Like this is where your top builds out. It doesn't strike me as odd though. Because like this technically as a top, again, like taking that shift value into consideration, probably represented something a bit different. I think I used the wrong one because we were thinking that this might actually hit here like a long time ago. Like I would have said this would have come up to this top and or this guy. So yeah, that makes sense. So you would say that, yeah, it's likely going to hit here to here. All of those things to me make sense because I'm like, well, they're in the same zone. Oh, we're only going to hit 35. That sucks. Well, yeah, but I mean, it isn't what it seems. And that, again, I shifted this down. So if you shift it right back, it'll be right back up to here. But the idea of it only coming down that far or only coming to that point, it may seem ridiculous, but if you remove the chart shift, it's like us, if you add the chart shift, excuse me, it's like us coming back to 64 valuation wise. It just doesn't feel like that. Great. Now we're only going to 27. I don't know. I just think there's lots of ways to look at the chart. I don't think that there's any only one way this could possibly go. $26. That'd be interesting if it only ever went back to 26. I think people would be pretty angry. What is 26 from the top? Oh, it's like a 50% retrace from 185. Oh, that makes sense then. Why that might show up. That would stink though, wouldn't it? But that isn't a possibility. I mean, it is technically like a 50%. Doesn't consider the chart shift, of course, but it's there. But then again, I bet if we use the chart shift, it probably would be this value instead. That's what I'm trying to say. Like, there's something about the like the original top and then the chart shift should be like close to that value. Yeah, right there. It's right in the middle. Look at that. That's exactly where it should be. It's right here. That's crazy. That's also not using the low. I should probably try to use like an imaginary low. It's probably going to be right on that gap still. I have no idea where that would be because I'd have to like figure out where that low is. I could kind of eyeball it, like these two spaces. It's close. But yeah, it's basically right where the gap is. So a 50% retrace there would have come back up, which is where I would have expected it to go. Like, there's this expectation that like it's probably going to come back up to this region normally. There's a retracement region between this zone and this zone. It's probably a 0.5 and a 6.2 retrace right here. Which is why I'm like not at all surprised if we don't get all the way up there, and especially in one fell swoop, because it would be like a shifted value. Still kind of stinks, but I wonder if I can make that shift value here, if that's the same value. It's pretty close. That gets a little bit noodly. You're sort of like relying on the extension there, which I think is a better extension, but it's actually stronger right there as a hit, so. We're doomed, man. We're doomed. Kind of like that though. That might be a good one to have in like your back pocket, because this trend, because I don't know, it seems really relevant to me. Especially here. It kind of makes sense then. It's right where it needs to be. That is where it happens come August. That's at 3. It's a little more like that bearish example we used. Ooh, Wolf's up to 130. Nice. I don't know if I'm going to trade out a Wolf. Careful if you're up. Oh, I am up, but I don't know what's going on. I should be up 30%. I bought it like $1. Yeah, I'm up. Oh, did it halt? I'm gonna be like screwed. I don't even know what to do. Yeah, 30% is a good swing for a shares only trade, so I guess we'll find out. Well, let's just follow the trend and see what happens. If it breaks through the trend, we'll just get out. Sound good? Add an alert there on that arrow. Yeah. Anyways, I think that this actually looks really cool because this then looks like this hits the 4 right there. Like right at 413 and then it comes back down. That'd be awesome. That'd be like perfect. Boom. And then it hit up. The only thing that'd be weird, I guess, would be this. This first move would be really odd if it stopped short. Well, wasn't this also like, yeah, there's like 2 earnings in the middle here. There was like 2 earnings reports. That'd be cool. If it went in July, which was sort of an early idea that I had, maybe it doesn't get up very far. I would think it would need to go to, I don't know, I guess I would think, but it would need to go up to there. But then again, you're operating on like past valuations. They're not the same. So maybe the idea of this being like a 50% mark is off too. It should be here. I don't use the chart shifts values as much as I could. Oh no, it is right there. Oh no! Oh no! Are you screaming in my ears, Booksy? Shut up, dude. Dude, this is a dude. This is a shoot, man. That's like the shifted value. Oh no. It does look right. Oh, and it still like obeys the laws of September 6th. I like this one too, although I like it for different reasons. Oh no, Booksy, what have you done? You've done it. You've done it. You fool. You fool! I don't get it. Booksy, what's the problem here? Oh no! It works! So if you shift this down to the middle, instead of, oh crap, instead of using, that's so interesting, because then that top actually shifts down to here. That's so weird. So one thing you can you can kind of do that I don't usually do is I've used the chart shift to bring this part up. When you bring this part up, it's easy enough because then you can see where it kind of would be, but then I always have to translate it back. One thing I've not really done is brought this down, which is kind of different, but we should probably try it. So that's a little different because you're instead of bringing that up and then kind of reverse engineering it, if you bring everything down, it puts it into a little bit of a better maybe perspective. It's hard to get this scaling right. I don't know why it does that, but it always like does it. All right, that's close enough. Yeah, if you shift this down, it actually takes this to here. Wait, let me make sure I did this right. I didn't do this right. This one comes to here. That's closer. I'm going to make extra sure. This is going to get super confusing for a second. Yeah, that's where it is on the shifted value. Although I may have just messed up vertically where it's supposed to be. If it is off, it's off by like a little bit. Not like a huge amount. Oh no! Like I said, let's go back to where I was before. Oh no! Shut up, dude. Oh no! Bugsy, no! Don't do it. What have you done? No! It's right where it's supposed to be. Oh. I hate you, man. I hate you so much right now. Yeah, I know. So this whole thing shifted down actually does a lot more justice for us than trying to shift the other up because it's easier to see, I think. I mean, I think it's easier to see. We're not moving anywhere, guys. The whole market's like reddish. All right, Wolf unfroze. Take a little dump right there. Whatever. I'll take the lunch money. I don't care. I don't know if it's going to keep going. I don't really care at this point. I'm just going to take it. Take what I got. You get what you get. Why not? Yeah, whatever. It's I got like $20, so I mean 20%'s not bad. I just didn't want to trade like $1,000 worth. I just traded the reaction. That was my trade today. It's a terrible trade. This is fascinating because this actually looks like on the parallel structure. This actually looks like it's higher. It is. And it makes sense because that's where that is. But like, it looks like it's higher up. Higher up. That's weird though. But now I wonder. Gasp. It matches. What devilry is this? It matches. Of course, it makes sense because I didn't measure it, but. So what you're saying is the stock's garbage and it's only going to go to like $26 to $33. Maybe. I mean, it's here. This is so crappy. Oh boy. Yikes. I hate this Booksy. I hate it so much. I mean, I don't like it either, but that is the middle. This is a very different outlook because this kind of implies that it doesn't actually go. I don't know what to make of that, I suppose. It's kind of a confusing setup. It would definitely go high to like near 12, but maybe hits like 13. But I'm not positive that it doesn't come all the way back really low either. It looks like it would go all the way back down to maybe even like 450 or 430. Yeah, it come all the way back here. I think this is gonna hit 4, guys. I keep flip flopping. I know I've flip flopped a lot, but if it did play out like this would be like near the top where it would be supposedly hitting next time. Yeah. I think it's gonna just do it. Do it. Do it. It's right where it should be. Hits that daily at 4. And then dumps off the face of the earth. Ah! Cue Wilhelm scream. And then it hits 8. This is just the previous example, by the way. If you're like, what are you talking about? It hits like 180 something. Then it rips in July all the way to why would it have to go that high though? I don't know. Well, look at that, man. Holy badolies. Well, you just caught a bee in a wasp nest. Wouldn't have to go higher than here. Oh, crap. This is the 860 area. I hate that. I hate that so much. Oh, Booksy, dude. You're killing me, man. You're killing me. Oh, man. This is brutal. This is brutal, man. It's brutal. There's this zone between $8 and $10.65. In this setup, there's like a 50% marker right there, which is where you would expect it to be. It's not like it's way off because it should be like at the angle here. But that's not even making a new high. That doesn't make any sense. No, unless this whole thing is like on a downward trajectory. Then it makes perfect sense because then you come back to this angle instead of this level. It's like an inverted triangulation, which actually does a really good job explaining the how did we even come to this conclusion? Like, where did this come from? I was talking about like chainsaws earlier, and then all of a sudden it was like, this is the answer. This is the answer, guys. Like, where did that even come from? I don't know. Came from your ridiculous, stupid brain, Booksy. Ugh. Boy, this would tick a lot of people off, man, including myself. That's the squeeze. The squeeze is going to $7. Kind of. Kind of. I wouldn't say it's going to 7. I would say that that's really where the breakout is. But it's very fascinating because this is a very different. Oh, no, my glasses, my glasses. All right, Thelma, I dropped my glasses. Bugsy going crazy. He's lost his mind. Go eat some tuna fish and broccoli, Bugsy. Get out of here. all of a sudden, everything made sense. Well, it does make sense because if the shift value is true and we don't need to go much higher than here, that is $26, which is crappy. But the middle of that range is like 33, which is actually the bottom here now, which is great because that's consistent with a back test on the floor here in the regular chart. What's annoying is that it doesn't, again, it seems like it's out of nowhere, but it's really not, because if you look back, this area from like 33 to 42, this is the range shifted down that we're kind of looking at. So again, it seems a little wonky at first because it seems like, oh, it's too low, it's too low. But then if you look at the actual values there, this zone right here, the 50-50 is that middle at 33. And that is the target range. It's just that you could go anywhere between 26 and like 42. We don't really know for sure that it's going to stop at 26. But that's highly consistent. It really is, because that actually is the all-time opening value, like right there at 42, which is that previous floor. See it? And then the 33.27 value is like the center mark there. And it goes way back to 2017. And what's crazy about that is years ago, I made a really bold kind of setup determination. I went back and looked at, because of the father of all, it was actually to do with the father of all charts. That's why this is coming up in my brain right now, is that I went back and I looked at this area, and what I said is that I thought that whoever entered this play did so back here in 2018, 2019. Wolf's breaking down. And I got out already, so. Because there was a 13F filing made, and I thought it was Vanguard. And I think that was the right choice. So anyways, I'm looking at this like, oh, this clicks. And then what also clicked here a minute ago is, you remember we were talking about the angles on this chart build out. And I said that if you look at the way this builds out, check it out. You're going to like this. If you're really annoyed with me right now, I'm sorry. There's nothing I can do about that. But you're like, you're flip-flopping all over the place today. But look, you're going to like this. So I think, look at the cat ear structure at the top right here, and look at where this angle builds out. And I made a mention that this angle is really low. Like, it's super low in our current time frame. And there's not really a good way to do this, because every time I try to draw this angle, if I draw it from the top or the bottom, it doesn't seem to really matter, but this largely defines where you can see it. I want to say it's a triangle, but you can see like that fan. Hopefully you can see that. That largely determines where that top is later. This just kind of pokes back into it, and then it breaches through it. This is a weird one because ours is like very, very, very narrow. It almost makes no sense. But there's a high hit because of that last push-up, and I didn't draw it on here, so it's a little off. There's this like hi-hat hit over here. You're like, well, that's way over there. I know it is. What was the other one? I think it's right there. But there's another interesting little factoid here, which is that this is also like the same place for the breakdown after the triple top, and it like hooked beneath them, which is like right here. It's hard for me to like, I'm purposely, it looks like I'm trying to draw it to this marker, but what I'm actually doing is I'm looking at this guy right there. It looks like I'm faking it. Like, oh, he's fudging it so it looks right. No, like it's right here. And then there's another one right there. So there's 3 markers right there. And that would be my likely candidates based on this guy right here. So the bigger difference being that this actually goes through all 3 of them when it pushed up. But look at where that is. And then look at where the cat ears form later. Again, kind of looks like I'm fudging it, but I promise you I'm not. Look at this. This is what I'm talking about. See how there's like this drop in, and then there's this wave cross down here. And then when it comes up, this is like an extension for sure. When it hits this, it leaves. But look at the later cat ears, like sweeping down through those trajectories out. So why would that excite me right now? Because I think it's the same like 1, 2 right there. And so I'm like kind of moved it over a little bit, but we've got one on this hook and then one on this hook. I can't draw it. Here and then here. That's like the walk down. So it's this weird like wider walk down. This looks like 2025. But anyways, I was making a point that this is like significantly wider. Like it's not, the angles are not the same as these were steeper, is what I'm trying to say. This is less steep. So this walk down slow, and it makes a difference when it gets to the end because it creates a sense of space here at the top that we didn't quite have in the same way. But now if you take the shift into consideration, I'd have to do where that top is. I don't know if I'm going to be able to do this. It looks like it's going to land right on top of this creek though, doesn't it? Oh man. Well, this might be a bit of a stretch. Kind of taking into consideration like the that's a shifted top value. It's not the only one because you can use like the middle here too. It cuts through it, which probably is a little more, again, conservative, which is probably better, but I'm going to use this one. So my oh moment was that, oh, that's right. There was a, why did I do that? I could have just used the chart. Why didn't I just use the red? I don't know. Well, I was correct. I picked the right spot. So this is a consolidation. This is not the peak. The peak goes way higher, but this is the buy button removal. That's the peak. What? So it does get to the top, the 1170. What the? That's crazy, dude. It's like the same move transcribed. Hits that 1170 mark or 1180 mark, which is this top. That's where it is right there. And it also, if you look at that on that shift value, it's right here. What? That's crazy. But then it comes way back. And then it consolidates way back down. Then it consolidates here in this zone. Wowzers. Yeah, and then it would break out there and go all the way up to the blue, but it wouldn't stay at the blue. So it would go there all the way up to 42, which makes sense. The thing is about this is that the timing on these is like way different. So I'm like not really sure what to make of that timing. Because that doesn't really match the widening. Unless I just picked the wrong number. I might have. I mean, this is off. I did that on purpose. I was trying to pick the... I didn't pick this one. I picked where it broke down right here, thinking that was probably more accurate. I don't know. It's a little tricky because I feel like that could make a big difference. I think going up to the highest puts it very early. Which is it, man? I don't know. I just don't know. I wonder if they used a perfect middle. Maybe if they did, I'm doing this a little wrong, because I bet a middle doesn't actually, this looks a little wide. A middle probably doesn't actually hit the top, probably hits that one. It's like more accurately what's being marked. See how it like divides it evenly, space-wise? And this doesn't actually hit the peak. The peak goes beyond it. We'd also probably have to see how it interacted with the trend, but I'm not going to do that right now. That'd be too much. All right, so yeah, it adds up. It's definitely not even. That looks more accurate to me. Well, this is really fast too. I mean, we're also giving it like a huge run up without a lot of space. That'd be weird to be up there in October, but it seems possible. Like a month isn't that far. 2 months is kind of slow. $20 to 30 days is about is pretty reasonable. This is very slow by comparison. It still looks wrong to me. Figure it out, man. I don't know. Should just use like a pitch fan or something, but yeah, it seems off, but that's actually quite right. It's about 20 days in September, and then I don't know how many people would want expect a September squeeze. That's kind of an oddball squeeze motion. The rest of it makes some sense to me. Then you'd have like a big, probably a big layup motion. Yeah, that's about what happened before. Big drop. Things get kind of snail speed after that. I mean, it would take a long time. What about that February thing? Well, I said by February. This is like way early. And it's humongous. So by comparison, it's a lot wider. And it drops. Goodbye. So this hit would look like it hits like the next creek, but it also would hit like the middle shifted and the top shifted, so on and so forth. And then when you look at the overall picture, there's a triangulation that's being made, although it's a bit obscure. Right there, see that? So that's the jump. Yep, that makes sense. I think they just shifted it like there. You can see like that's meeting the old bottom. See that? It's like this top is now the bottom. And that makes sense as to where that is and where this is. So then what? I don't know. Die by March 2027. It triangulates out pretty well to this breakdown zone. So like a top pivot. When a top pivot, it does make sense. It seems a little odd, but if you think about wavelengths and trajectories down, it does make some sense that would be like the next top. So this would be like a peak. Where is that? 2025, right? $2024. That's 3 years. April to April. So then it'd be 2029 is when the debt is going to be all messed up unless something changes. But this actually gives you 2030, March 2030. Does anyone know exactly when the debt, is it late in 2029? I wonder if this is like, or if that's just giving them time. It looks like early 2030 to me. So this is actually a potential high point. It doesn't mean it's the highest marker. It's just roughly where it would be. Yeah, the rest of this is kind of like the same. Like you'd have another slump back down, and then if nothing changes, you kind of do the same thing again. Well, this is ideal. This looks like a dumb chart, but I'm pretty sure that that's correct if it breaks down the other way. Shoot, look at that. Maybe even get a like a middle pivot here and do something similar, drive the price down for your reactionary zone here in 2029. It's stupid because it's the same, but I mean, I'd say that in a mean way. I'm not trying to say that in a mean way. I'm just saying like it's essentially the same thing, but just slower, slightly slower, and roughly it's the same though, because it's still like a 3-year up down cycle. That's if nothing changes. There'd be chop in the middle. It wouldn't just go like straight down or something. That's not really accurate, but there'd be like a bunch of chop through here. It looks identical, but that's also, again, building out on the premise that it did go down again. The other alternative is that this is like a high low, and so that would be like a wave cross up that then comes down low. So instead of a pivot that just drops down and resumes like a new high low structure, you could hold up right here. And that in theory makes sense because you'd have a reason to come back if that's a spring long term to 478, 482. So if it lost 482 again, I think you'd be in big trouble. But if it held 482, you'd probably be in a pretty good spot. I think you'd be in a good place. Because that could be like a rebound that, if it holds, kind of transforms the nature of the chart. But that's way off in the future, so yeah, it'd be roughly in this area. It'd be the equivalent of like a retest. I think if that retest worked, then you have potential to actually come up and break out going into 2029. That would be a very dynamic change, and that's more like what we would be accustomed to seeing in a bullish run, because you'd have like a move here in 2029 instead of down low. That makes more sense to me. And then what's crazy is that if that were to occur, which is a big if, but yeah, if something like this were to occur, then you'd actually have a chance of this move again. It changes the chart into almost like a widening. So even though we've already made this move, it would do it again, but like from roughly here, which may seem a little odd, but that gets you back to the top. Yep. It could be a little bit lower, you know, if the way this builds out does end up being like 2029. Just sort of depends on where this is at that time. There may be another creek here, for example, and that's likely anyways. So if that were to shift it, it just shifts it. So it's like a breach of that creek, but then it doesn't quite go, and it backs up and ends up being, again, like a close to bottom retest here, in which case this doesn't go back to all-time highs, but it does get back up to probably here. Like the angle of that, it's probably back to this hook again. That would actually make sense. And that should bring it up at least back to the original, if not the top. It should be the original tops. Because I'm thinking numbers-wise, like where that would go on a big picture scale. You'd be coming back to this value here where that breakdown happened. Yep. It's the right value. That's like a bullish setup. So this seems like a bit of a bonkers chart because it's like way out there. But a lot of it actually makes a lot of sense based on the way this sets up right here, that this could be a big fan at the top. like a longer distribution model. Kind of painful too, perhaps, compared to some previous ones that we've experienced because of how sideways it would go for a long time. I wonder if it's like the same time that it took down here though, because this has been a long bottom. It could be just like a rotational thing. Oh, it is. It's the same. It's the same exact time. So it's like a higher, almost like a inverted accumulation, right? That makes sense. It definitely makes sense if you're going to drive the price back to 4. You need to spend a lot of time up here. Crazy, huh? Well, obviously, this is just technical, whatever. What I'm doing is measuring wave formations and trajectories. This seems very correct to me for a number of reasons, not just because I'm already favoring the middle of, the early 2026, which is still in the same spot. It's still right here. That's February right there. But there's other things. But at the same time, just take into consideration that this is still like speculative. So I don't care if it's perfect. That's not my goal here. My goal is to be doing the measures correctly. If I do the measures correctly and it doesn't end up being the right thing, then okay. But at least I did it right as I could do it. So I think I'm happy with that. There's not really much else to say about it. It's a bit confusing because there's so many lines again. But we actually found that this is quite consistent with some of these expectations. So I find it to be pretty compelling. You may or may not. I think some of the big ones are what really got me here, like hooked on the idea. There's some really huge connections here that I made that I felt like, oh, that really works, And it still sort of follows like the previous chart, which you need to do for a number of reasons. This one's kind of a good one. I like it. We went back through like big picture stuff today, didn't we? So I'm not out of AMC. I'm not expecting anything horrible, but I do think we have a setup now that we can look at if it starts turning more distributive and long form, like this one did over here. We got like another way to set it up to see that. Now we also have this kind of build out, which is, I think, quite nice for like a macro understanding of trading zones. I think it works really well. Really, really well. And makes a lot of sense to me for a number of reasons. So I'm pretty happy with all that. I think it looks good. Well, that's not my problem. Have you been here the whole time when I built it, or did you just show up? My response was, that's not my problem. Sorry. It's very simple, actually, but I'm not going to go through what I just went through. So, like, I literally just went through this whole thing, like, over the last hour. So, I'm not going to do it again. I'm trying to get rid of some of the redundant things that don't really need to be on the chart. So there's a lot of little things here that are basically the same thing over and over again. It's not really that complex. I don't know. I feel like it would be easy to maybe mistake and think that it is, but I think I didn't color some of these again. But basically all these bluish colored lines are the trends and the shifted trends. That's these guys, these parallels. So they were shifted down. And then I took that and actually just shifted it in reverse so you could see it in accordance to itself. So the red is for lack of a better word, it's like retroactively shifting that stuff. And then this is just forward looking. It's just a projection of what's already happened. This is just using local trends versus what happened before. So what we found was that there was high consistency in the variables. And what I did is I started with the levels shifting down, which I've done before, but this time I just did it kind of to the nth degree, which is quite a lot. I'm trying again, delete redundant things here. But yeah, these are the same markers. They just are flatter. That's it. This is a chart shift value. And then I took all the same things applicably that applied in the downward motion and the upward motion over here and just inverted them. It does look very different than everything else we've looked at, but ultimately it's quite simple. It's basically you have a new channel, and that new channel is this big blue line here to this big blue line here. It's like bluish greenish. I'm not going to have time because I'm about to stop. I need to go eat and stuff. But yeah, these are the new shifted values for January. This is the top value. This is the anchor value. This is the top and bottom values potentially. So near like 180s and then up to 42. It's not that complicated. And then this is just a wave back up. The only thing I would say that to me is like highly questionable at this point, or that may be something you could question at this point, is like, where does this actually end? I don't have like a solid answer for that right now because I don't know exactly where these lines are. I didn't put them necessarily like perfectly. I think I got pretty close. But like we've already said, September to about March, so September to about March next year, that makes sense because it's going into 2026. That's still like the latest that I'm going to put it. And you can make an argument, I did it earlier, that it could be even second half of 2026. You could even argue 2027, just depending on what happened down here when it gets up there. Because these are the trajectories it's going to follow. But the timing of things is very different than it was back here. I think that based on the setup going in, you don't actually need to spend as much time. And I think there's just going to be like a buy-in from 4 back up to 7, which is over the top here, and then probably back down to 590 to retest. And then you're just going to go, which is fine. Weirdly, that kind of skips this middle range from about 9 to 11, which isn't what you would expect, because you would expect, I had originally expected it would come back up to the same level. And like, why wouldn't it be right here? But that's what I'm making an argument about, is that it may not do that because there's a sort of a trend right now that it's coming downward. So it's possible that we may just not get it. And that's what I've been trying to say about the motions here, is like, it's not that they're all like, it's not that complicated. It's really not. It's just that you can't know what you don't know. So if you get to a place of like, I'm not really sure, then I guess you have to just sort of leave it at that. It doesn't make a lot of sense to me to to speculate about it beyond that point. So once I get to that point of like, I don't know, then I kind of just stop. So I still think somewhere between 236 and 180 is likely. But then everything else beyond that is just may not even get that low, guys. It looks like 215. I keep saying 180s, but everything on beyond that is just a transcription, but lower. It is where it should be. So if you use like a 1-to-1, like they're going to go sideways, this should be up here at hit 20 or 15 and then come down to 9 to 11. But if you use the chart shift, it actually makes a case that this would only go to 12 or so and then come back to 7 area. Consolidate right here, right above the top of this previous range with this like shakeout, and then break out again. And then it wouldn't go all the way to 60 or 50. It would only go to 33, maybe as high as 40, but and I've said before that, I think I'm right about this. Like, this is one of those ones that I'm like, yeah, this looks very convincing to me. Sometimes I'm not as convinced. I'm like, meh. This one is very convincing. There's a lot of reasons why it makes sense. Because if you shift everything back up, everything clicks right where it needs, like where it would have expected it to be previous to this whole debacle. So when is it 33 to 44? I'm really boring. I'm a one-trick pony here. It's by about February 2026. That hasn't really changed. I was trying to kind of find maybe evidence that did change, but it doesn't really look like it. This is February 2026 right here on the intersection. At earliest, perhaps in September, and all that really is like you're leaving here on the 6th, which is what happened here when it left on May 19th. It's like the 2-year cycle's done, so you end the 2-year cycle 2 years later, and then you go up. And that means that the timing there would be a little different, because you'd be pushing up from a shifted value that's now lower, which is right here at like 650. It doesn't take you to the moon. It takes you to maybe 42, but more than likely, I think it hits 33, 34. And it measures correct, which is fascinating, because that's like obviously the same measurement pulled down from over here, which is odd, because it's not even, I don't even know how to like describe that except just to say that it works. Yeah. So I don't know. That's a huge move. It's kind of out there. Then you'd be stuck in like a distribution limbo for a long time, for like a year. Pretty much from, yeah, for like almost a whole year. Because you go from, especially if this goes up October 2025, it'll probably be November 2026. It's just wide. It's super wide by comparison. Only because? No. There's like dozens of reasons why it might hit 4 again. But I can't go through it all like all and over and over and over again. I'm not going to do it again and again and again. So there's a huge amount of evidence that supports the idea that this is going to go to, there's a huge amount of evidence that suggests that this would go to 4. One of the more basic things, again, is just like what is being tested, and it's going back to check the liquidity at like 415. We didn't come back up to 4. But there's other things at play there. And it would establish, again, a check on that daily moving average. It's an iterative check, so it'd be an iteration of this happening again. There's a huge amount of cross-sectioning there at 4. There's a sense in which you're building out a 50-50 later, and you're developing like middle structures. Essentially, like this creates like a new top right here for testing. You're now generating like a resistance. You're going back to retest like another trend. Like I didn't really stress this because I just said it's a shifted value, and it is. But if you look at that as a trend, it's also going to go back and check that area. It checks the parallel. I mean, there's so many other things. I have been extremely hesitant to say that I think it goes all the way to 4 because there's just a lot of problems right now with the setup. And I spent the earlier portion of the day talking about those problems. So if you're like wondering like, well, what could go wrong? The biggest problem area for us, to me, lies just above 322 up to about 335. If I have to pick one area that I think could cause the biggest headache, it's that area right here. From like 322 to 335. Okay, if I just had to pick one. Now we already kind of almost hit it. It's my biggest concern spot. There's an S-curve that kind of terminates right above it. I'm nervous that it doesn't go all the way, that it stops short and only comes up to like 345 or 350. Okay, I think that's a sticky zone and it could be a problem. I could say it a million different ways. It's going to be the same every time. It is a bit of a problem zone for me. I think there's a possibility that it just doesn't go higher. But the next target up in my mind is definitely going to be that $4 region for, again, all these other reasons and the ones I didn't even list. There's a ton of them. And if it only hits 398 or whatever, or 393, and somebody comes back in here and whines about it to me, I'm going to kick you out. And I mean it. If you come back in here and you tell me that you said 4, but it only came up to 398, I'm going to freaking boot you. Because I'm so tired of that. If it doesn't get there, it's not my fault. All right? The fact is that that's where that liquidity check has to happen. Whether it gets there or not, I cannot tell you for sure. I cannot tell you for sure. I'm telling you that's where the main triangulations are. That's the big picture. Nothing has changed. But I'm telling you guys, you come back in here and you whine at me in sincerity because it didn't hit 4 and you missed your exit, that is not my fault. I'm going to kick you out. Dang, Booksy harsh, man. Not harsh, it's just real. Don't do it. Like, this zone right here to me is probably the most, if it's going to do what it's going to do, this zone right here is the most hot button zone, but I cannot prove that it's definitely going to do that beyond a shadow of a doubt. It's not possible. And if it stops at 330 or 340, don't say I didn't warn you, because I did. There's a problem there. There's some issues. I haven't seen the volume come in. I wanted to see like some kind of a big gap move. That would make it way easier. Instead, we're having to kind of like sit through all this really slow burning backup kind of stuff. Okay? We're not there yet. So, I don't know, man. When does it get there? Yesterday I said this S curve actually ends at, or excuse me, today I said this S curve actually ends, as best as I can tell, it seems to end at Thursday at 4 a.m., which is tomorrow morning, right? So I haven't been able to find anything else that suggests otherwise. It's like in this little pocket right here, something like this. It ends like right there. In like early morning on Thursday, which means that it would be like a huge overnight move. That doesn't make a lot of sense to me. I don't like calling for overnight moves like that. I very, very rarely do it. If you follow this channel, I almost never say gap up after hours kind of thing. I do think that it's possible to predict something like this if it's happened in the past and you think that, well, there could be similarities, you know. But I don't think it's possible to sit there and say, well, it's definitely going to gap up. But what I'm suggesting to you is very odd because I'm saying like, well, I measured it and I measured it with extended hours on and it looked like the middle of the night. It didn't, you know, or early morning. It did not look like, you're sassy today. I know. It did not look like like the middle of the day. So I don't know. I don't know what to make of that. Maybe I got it wrong, but I guess that's a possibility. I'm more inclined to think that it's yeah, it's just one of those possibilities. And I don't know where that was measured. I don't even know where I am anymore. It was on this chart, but it was on a different one. It was like right here. It was like right at 348 or something when I did it. I don't know. Yeah, it'd have to be that extension. So if tomorrow we're up here and then dumped and it fails, I don't think we're going to do it. But maybe it just holds one more time at 320. That might be all we need. And then Tuesday, you could see even like 430. And then it could slide backwards. That's a possibility. It'd have to hold like one more time near 320. It could go a little bit lower, but it'd have to get back above 320 or else it's going to die. I could see that being part of that breakdown. This is a daily chart, so you can't really see a lot of nuance on it, but yeah, I'm just going to keep stressing that 322 level is very, 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 very important. And I think if it pops up and it hits like 350s, I'm probably going to be, or 340s or something, I'm probably pretty much done. But if it holds up good, I'll keep some and I may even buy more, because if it holds up above 320 into Friday, I think I'm bullish that it pops one more time. But if it doesn't, I'm bearish, because I think that's where it has the crap out if it does. It's just a question of like when. Like, I'm almost positive that's where it's going to be. Yeah, when it capitulates this time. That's just local stuff. So it's just a matter of like when that happens. That's okay. We've got a lot of data now, so we can go through a lot of different things. This one is interesting because this is like the big pop happened. You might get like a second buy-in even into June and like stay floaty until like the very end. It might be slower than expected, kind of what I'm trying to say. In the other way, it doesn't really work that way, but I digress. I should have just left it simple. It's easier when it's simple. People don't have to ask as many questions. You would expect it to come backwards and come back down to 3, basically. I would. I'm expecting it to come back to 3 and then basically just go sideways until it craps out, like right there. There'll be chop. It won't be like that, but it'll be like chop. But that'd be like the big picture. And then if it hits here in like early July, I'm pretty bullish. I think it comes low, especially if that on balance gets hiked up. Whoosh, whoosh. Yeah. It has to do that 1-2. I think the 4 hour is right here, so it would jump the 4 hour as well. So if you're looking for another indication of like, what would I be watching for? Like, this is the 4 hour moving on extended hours. It's above it right now. This is looking kind of meh. Maybe not my favorite with extended hours on. But you can see that the move above it's ending up being right where it needs to be, which is like there's the 312. So it would have to be some kind of a big move above here and then back up, and it has to then hold this support right around 320. You see why? Looking backwards. Then it would give you that extension. And I think that's where you're going to see it pump to like near 4s. This pocket. But this S curve is done if it hits 340, this little one. So I'm thinking that's why I'm like not sure. Thinking it might be a bit of an issue. I did buy some random like 35 strikes for GME for this week, because just like AMC, it's kind of coming to the end of a rope and it has to make a decision. And it could be really bad for me, I guess, if it goes the other way, but I think I still have those. Hope I didn't get out of them. No, I still got them. They're down like 18% or something. They're not down very much. Yeah, Beyond Meat's going. It's up a little bit today. That's good. I guess. It's a squeeze play. My Fang calls are dying. That's all right. Maybe there's going to be some kind of news. But this to me is like, it already kind of finished right here. I'll give it an extra day or so because I'm always like, well, I could be off by a half a day and it could be wrong by a day over here. So I always give it like a little bit of padding, not worry too much. If it goes on prolonged into the end of the week, I might be a little concerned that this doesn't move. But I think GME might start moving tomorrow and heading up. It's got to make a decision here if the cross is going to happen up or down. Good. Yeah, I'm happy with today's price action, actually. This looks fine. Don't really like the secondary pump to 3. It kind of failed to do anything. Went to 301. But that makes sense. This is also a floor level. So it makes sense that it would get stuck here and have some trouble. Actually, it's pretty nice, dude. I really do. I like this setup. I'm enjoying myself with it. That's an interesting little gap right there. That retrace back up. This is a little irrelevant. It does make me wonder, because it's parallel. It runs with this one. And that was the first one I got. Well, we'll see. Hopefully today we see something, or tomorrow. Maybe we'll get some news. Oh. Is this a sign of weakness? Yeah. It's already happened. You can see that candle right here on the 4-hour. It's like beneath it. It's already happened, but remember, like an SOW on a trend is a little different. Trends are not technically Wyckoff, right? So we don't talk about them like, oh, it's a Wyckoff schematic. That doesn't make any sense. Wyckoff is for ranges. But you can say it's a weakness if it pushes below a trend. Just keep in mind, like, where else might have been this may have been developing, because it hasn't actually hit a bottom yet here. So the bottom you're using is this guy. Well, this was a creek jump. Well, prior to that creek jump, there's another trend right there. And that could be part of like a bigger structure here, like a consolidation structure. So it's possible that this actually is going to come out further and hit a low, and that you're a little bit early about this idea that it's actually a weakness. So is it weak because it broke down there? Sure, it lost that. That doesn't necessarily mean it's got to go really low all of a sudden. It's just, okay, that might not be the trend. I would be cautious and just say be patient and wait and see what happens at like 290. And usually it's like some kind of a creek cross here too. So yeah, so I would be cautious and say wait till like maybe 290. Don't fret if it doesn't do what you think it's going to do right away. Below that, yeah, you could fret. Then it drops far. Really? Yeah. Then it comes way back. There's nothing really else there. It's just kind of come down to like 270s or something ridiculous. Then this just looks like a distributive top.
It's time for your afternoon stretch break.
And I hate to do that to you because it's like I'm going to be leaving in a minute. But this is it's a bit of a cliffhanger. We'll see how the day ends. You'd have to look and see if there's another upthrust probably before the end. I'm on the 4-hour. You never see it on here. But there'd be like a hook, and then it would drop through this level and just crap out. I think if it holds above 290 here, it's possible it's still really strong. So All right, I'm done. I got to go eat. I'm sorry, guys. And I got to do some other things around the yard. A lot of tree cleanup junk to do. I appreciate y'all, and I'm sorry I didn't get to everything. I said I was going to stop, and I kept going for a little bit. So, you don't think it sweeps to 4 for buy-in? When did I say I don't think it does that? This literally on my chart says it's going to like 4. I think that there's a possibility because of the way this is built that it stops, and it's very, very possible in my mind that it could stop up here in the 3s, 330 area. This is a really, really sticky zone, and if you're going to distribute low, that's where you'd probably do it. I think if it distributes low, it brings into a lot of questions what happens next. And that's what I went through earlier in the day. I'm not going to go through it again. So I did it first thing, went through all this stuff. If it distributes by only hitting 3 and then coming down to like barely make a new low, I think it's a problem. And I think it could demonstrate that there's going to be another macro distribution way over here, big picture, that takes a lot longer. Not forever, but just in the short term. Well, I say big picture and then I say short term. That doesn't make sense. But in the next like 3 to 4 months. So something's going to happen. Otherwise, yeah, we're kind of in a meh situation. I'm done. See ya.